are discussing today, that we gather with other very important and distinguished guests to discuss these first years. So please allow me to present some of the panelists today. So we will have an introduction by Valius Mindaugus from the European Commission, and then we'll organize our discussion in three main areas. The first group of topics that we'll discuss will be the differences in member states in adapting the national framework to the crowdfunding regulation and the main obstacles encountered by operators in obtaining the license, depending also of the national competent authority and countries of main operations. The second area will be the interaction of the European crowdfunding provider regulation with other European and national frameworks. And the third area we will discuss is the residual doubts in applying the regulation and possible future revision, also with the report that will be prepared and adopted by the European Commission in few months, years probably, but we will ask also Valius Mindaugus about this. Other panelists include, so we have, I hope in a few minutes also, Laurent Tristan, Senior Policy Officer, the European Securities and Markets Authority. We have also Florence de Maupopitel, Director of Finance Participative France. Eduardo Reggiani, Head of Business Development at Bet to Work, one of the Italian platforms. And then many also authors of the commentary that we are presenting today. We have Tania Aschenbeck at Osborne Clark, Germany, Roberto Ferretti, Annunziata and Conso, and also President of the Association Européenne pour le droit bancaire et financier Division Italy, Matteo Gargantini from my same university, the University of Genoa, Eduardo Grossule, University of Pavia, Anne Acquart, FG Lawyers, Amsterdam, Jean-Marc Moulin, University of Perpignan, Thomas Neumann and Cecile Oigvan Christensen of Aalborg University, Diogo Pereira Duarte, University of Lisbon and Abreu Advogados, Umberto Piattelli, LCA Studio Legale, Costantino Serdaris, Utrecht University School of Law, Ella van Kranenberg, Kaiser van der Helten, Carsten Welsaf, University of Hamburg, German Crowdfunding Association, and also Alternative Finance Center, University of Cambridge, and Diego Valante in his personal capacity as a German professor at the University of Bologna. So I'm very glad that we have all these eminent speakers today. Just a brief note to the participants. If you have a question to ask the panelists and the speakers in general, you can write your question in the chat, and we will ask the same question to the panelists. Otherwise, you can also ask to have your microphone turned on and pose directly the question to the panelists. So without further ado, I leave the floor to our guest speakers from the European Commission. Thank you again, Valius, for participating and give your important contribution today. So I'll stop sharing.
Thank you, Dr. Machiavello. Good afternoon, everyone. It's a pleasure for me to be here with you today. And perhaps I'll begin by taking a step back and appreciating for a moment how far we come over the last 10 years. I think it's quite remarkable the progress that we've seen for the crowdfunding sector and the regulatory framework surrounding it. As you may well know, for many years, one of the biggest hurdles faced by crowdfunding platforms that sought to offer their services cross-border was the diverging licensing framework and the lack of common rules across the European Union. I mean, this had consequences. It resulted in high compliance and operational costs, which prevented crowdfunding platforms from effectively scaling their operations. As a result, small businesses had fewer financing opportunities available to them, And European investors also had less choice and faced more uncertainty when they were investing cross-border. Now, with the adoption of the regulation on European crowdfunding service providers in 2020, this marked the beginning of an end for this period of fragmentation. And most recently, with the expiration of the transition period, we finally cemented it. As of the last few weeks, we have one single pan-European licensing framework for all providers of investment-based and lending-based crowdfunding services. In addition to that, earlier in October, the Commission also adopted the last regulatory technical standard on credit scoring, pricing, and risk management policies. With this, we now have all 15 of the level 2 measures for crowdfunding in place. Our focus is therefore now turning to implementation. And this is the topic of today. Effective implementation of the framework is really going to be essential for achieving our key policy objectives. I would therefore like to take this opportunity to thank all of you, the crowdfunding stakeholder community, for all the enthusiasm, support, and insights you've been continuously providing over the years. I believe that you've really been a key driving force in the development of this industry. Now, as we turn the page and move into the next chapter, I hope that we can continue counting on your feedback and support. And I'm very interested in hearing your discussions here today. Thank you.
Thank you very much. It's very, very useful having your point of view presentation for such an important piece of legislation. So it's time now to start the discussion. So the first area of discussion, as I anticipated, is first applications. So we thought it would be interesting to start with a presentation by Professor Welsloff on about data on the first licenses. So which country has the highest number of licensees, and what other characteristics and data about this first round of application and authorization. So I give the floor to Karsten. Thank you. So the floor is.
Thanks so much. I'll start the slideshow here. Okay. So the data that I'm presenting, and hope you can see my slides. I will put those slides later on LinkedIn. So if you want to have them, that's fine. They're also under a Creative Commons license, so they can be used. And I'm currently working with a colleague of mine, Anna Odorovic, on how we are going to publish this data. This is sort of the data from today, actually. It's from, I just downloaded the latest Excel files. As Eugenia mentioned, November 10th was the final day of the transition period. But what is quite interesting, when we surveyed all the crowdfunding platforms in May and June for a report which is going to be published at the end of this year or early next year, there was an interesting response, because at that time, about every fourth platform at that time, which was not licensed, planned to stay out of the ECSP. So 3/4 were planning to transition into the ECSP regime. And every fifth platform, which already had an existing license, planned to stay out of the ECSP using existing crowdfunding exemptions, using different ways to not fall into the scope of the ECSP. So it's quite interesting to see these different strategies. What I did was I used the ESMA data. I cleaned it up. I validated this with platforms, because sometimes there is a little bit of inconsistency, but ESMA already told us that they are going to provide a much better online tool to search the ECSP platforms. So with that, this is the status from this morning. So as you can see here, this is where the platforms are licensed, in which in which countries they have received the ECSP license. France is ahead with 35 platforms, followed by the Netherlands. Italy made a big jump from my last slide deck, which I uploaded, I think, 10 days ago. Has received 11 platform licenses. Spain follows with 9, and then a number of countries have a smaller number of licenses. In total, I think, yeah, that's on my next slide. In total, we have 110 platforms which have received the license. The ESMA list has 115 entries, but this is because there are 5 duplicate entries. So that's why there are really these 110 unique entries, which I count. 9 platforms out of these 110 operate in all of the 27 member states, or have received the license to operate in all of those 27 member states, to be precise. But the vast majority of platforms only operate in 3 or less EU jurisdictions. So 90 platforms out of 110 are currently only licensed for 3 or less. Actually, when we look at the ones which are only operating in 1, it's I think more than 50% which only going to operate in 1 EU jurisdictions. And when we look at the big 4 countries, France, Netherlands, Italy, and Spain, then 61% of all of those platforms are licensed in one of these 4 jurisdictions. I did reach out on LinkedIn. You probably have seen the post, and asked platforms why they chose a specific country. And I just want to sort of just put this here for discussion later as well. I think the main reason why countries chose certain jurisdictions over other was the supervising authority and how quickly they implemented the ECSP regulation and the RTS, but also the cost of licensing was an important factor, and also this idea of licensing readiness. So in that sense, being able to work with existing business models and transform them into the ECSP. So those were the main factors. I can give more details on that data later on, but of course that's not part of the ESMA data. It's just what was the feedback on why certain platforms choose certain jurisdictions. Now, when we look at where these platforms are going to operate, here are the dates, or the data for which countries they choose. Again, of course, France is leading, Netherlands, then Italy, Belgium, as Spain, Germany, Sweden. And then, of course, because we have 9 platforms which want to operate in all member states, of course, other jurisdictions like Cyprus, Greece, Croatia, etc., they are also in the sample with 9 platforms that want to operate there. Whether or not they have offices at that time is I couldn't check yet, but that's one of the things I'm planning to do, is going to each of these 110 platforms, or the ones which are going to join by the end of the year, and going to see where they're actually active and which countries they are using for their headquarters, etc. When we look at what kind of platforms services they're going to offer, it's interesting that in the last couple of weeks before the ECSP transition period deadline, it was mostly 50-50, or more like 1/3, 1/3, 1/3. So 1/3 was in securities, intermediation of transferable securities. One was placement of loans, and the other third was applied for both, or received the license for both. But just in the last week or so, all of those, there were quite a number of lending-based platforms which were added to the database. And so now we have 48 platforms which are only going to intermediate loans, 28 which are only planning to intermediate securities, and 34 which are going to do both. And now when we look at what kind of other services these platforms provide, you can see here that it's you know, something which is still very dynamic, but you can see that, for instance, here this establishing and operating a contingency fund, that's only one platform which wants to operate in this area. But when we look at, for instance, suggestion of price and interest rate of crowdfunding offers, that's something which more platforms, almost close to the majority, are going to be doing as an additional service. And then I can also give you the data regarding equity and lending, but what we see here is that most of the equity crowdfunding platforms are actually planning to provide also crowdfunding services through special purpose vehicles, which are then operated by the platform. So that's kind of interesting. What is also interesting, what I find personally is interesting, that almost 1/3 of the platforms are going to operate a bulletin board in replacement of a secondary market, and a little bit less, but also close to 1/3 is going to operate a payment service. So, which is, I think, quite interesting, because the discussion around bulletin boards was very controversial in the trialogue and in the discussions beforehand, whether or not to allow these and what are the frameworks. And I think there's certainly a market interest here to operate a bullet point. And then regarding the payment service, that's also quite interesting, that in my view, that many platforms choose to also do that and apply for additional license in that case. Yeah, and as I said, I'll share the data later on. I can also provide you directly the clean data. More than happy to contact me. I'm going to talk a little bit later on about the German experience, but I just want to mention two things. So we're going to have an alternative finance research summit where we hopefully can talk more about ECSP in Krems, Austria, organized by the Crowdfunding Research Center in ACTA. So I want to mention this to all the researchers, and of course all of those who want to join us in Berlin in Germany. We will host a Digital Invest Summit. You are all more than invited. So with that, here's my contact data. If you want to reach out, please join me, and I really look forward to this discussion.
Thank you, Carsten. Very, very interesting. If I can ask you a question, I don't know, of course, if you know the answer, but do you have data to compare this? And so, for example, have you noticed platforms changing their business model, taking opportunity to new services like portfolio management that in some countries was prohibited or anyway not regulated, so it was a bit uncertain to go into that? Or for example, specialized in the loan-based crowdfunding, but moving to the investment-based thanks to the crowdfunding regulation. I don't know if you...
Yeah. I have some anecdotal evidence, but I think our panelists here definitely have that. We are systematically serving this with the report which Anna and Rotem and other people are working on right now, and in that the changes of business model are also going to be discussed. What I've seen from the data which I collected is that the majority of platforms did not switch between lending and equity in that sense. If they have already received a license from the national regime in equity or lending, then they usually only applied for that. However, I saw maybe 6 or 7 platforms which started either merging with an existing platform which provided a different service. So for instance, I have seen equity platforms that merged or started collaborating with lending platforms to offer both service under a joint ECSP license. So that's what I have seen in that area. But I also want to say that from this list of 110 platforms, I mean, although I think I've known a lot of people in the European crowdfunding space, but I think, like, when I was looking at them and looking at these websites, about, I would say, 40% of those are new companies which have just applied for the ECSP license and did not have any crowdfunding operations beforehand. So for me, they were completely unknown and coming out of nowhere. And of course, there are also a few platforms like the Warsaw Stock Exchange, which, as far as I know, didn't operate any crowdfunding platform before and simply obtained the license. So a few more traditional finance providers, which I think have also applied to the ECSP regime.
Great, thank you. Very interesting. I don't know if the other participants have questions for Carsten on the data presented.
Just to illustrate what Carsten just said, and hello everybody. Yeah, in France, it's upon the 30. We have 37 platforms, 37 license today, and upon this 37 license, there are 10 new crowdfunding platforms. So this new regime was also an opportunity for crowdfunding platforms to start a business because 10 are completely new. They had no agreement, no French license before.
Thank you, Florence. I think that now it's a perfect to move to sharing experience from different country on how easy was or what were the main obstacles in getting the license. So I also from my geographical provenance, I would start with Italy, but also because from the data presented by Carsten, it was evident that we had a delay. So at the beginning, November 10th, there were really, I think, 2 or 3 platforms authorized. Then all the others waiting for a decision had to stop the activities, rely on cash flow, etc., because they could not continue as operation without the authorization based on a new regulation. So it was really, I think, complicated for using soft words, but it was also because both the country had very late adopted the legal framework to implement the regulation, adapt the legal framework, and we had also consequently then the decision by the Council and the Bank of Italy. So I leave the floor to Edoardo Reggiani, that was of course within this system for back to work.
Thank you, Genia. Can you hear me well? Okay, super. Yeah, thank you very much for inviting me in this panel, and I'm really happy to be here and to share our experience as operators that managed to obtain the license. As you were saying, Italy started late. The regulation was managed late, and so the regulators has to go really fast, because they had a really short span of time in order to manage the authorization for the platform. We were one of the first 11 platform authorized in Italy, and we received the communication from the authorities Friday, November the 10th at 6:30 p.m. So that's really Italian has approach, but we were happy, of course, because it has been really a roller coaster, the process in order to obtain the authorities. Just to add a little bit of data from Italy to the one that Carsten presented. Today, still 11 are the platform authorized, both for the equity and lending. Before the ACSP, there were more than 50 platform authorized for equity in Italy, and on top of that, there were at least 30 for that were doing lending services. So more or less 80 platform, and it's just 11 that are authorized today. So there's still a lot that has to be done by the authorities. What we experience is for sure a long process. We submitted all the information to the authorities, which is 2 in the case of Italy, the Consob and the Bank of Italy, in June. So it took more or less 5 months in order to obtain the authorization. Talking with other platforms from other countries, we understood that there were countries where the time frame in order to obtain the authorization was like really smaller compared that the 5 months that it took for obtaining in Italy. And in these 5 months, we of course work on lots of documentation. We talk with the authority a lot, and what we see is that the authority was in a rush. So the indication we received was just to focus on what we were already doing on the market. So for like our platform was specializing in equity. So like the indication we received, but also the other players received, was to focus on what the platform was already doing and not to go for other services in order to be faster in the process of the authorization. And if we see what have been authorized to do, like the 11 platforms that are already authorized, most of them are just authorized for what they were doing before. And almost every platform, like 10 out of 11, they were already operating with the active campaigns, etc. So that is like the first indication. And the other indication we received was to not to try to go abroad, but to focus on Italy still, in order to move faster with the authorization. So the indication of the authority was really invasive on one side, because like they really define a path in which we had to move in order to get the authorization in time. And also the approach was a little bit of invasive, because like, for example, the authority asked platform such ours to, for example, modify like the statute of the company, like what the company can do and what is written in the statute. That is really invasive, because of course, like according to the Italian law, you need to go to talk with the shareholder of the company, find like a quorum between the shareholder. And for example, our case, one of the main shareholder of the company is a bank, which is big, which is not so fast in decisional process. So it was like another complication that we had to face in order to get the authorization in time. We managed to do it. Probably some other platform didn't manage to do in time, so they are stuck until like they just like do what the authority asked them to do in order to have like the company with the proper structure. On the other hand, what we experienced was like not lower attention, but not an invasive approach, for example, on the investor onboarding. So a lot of attention on how the company is structured, how like the compliance is managed, how like the control role in the company are set. Of course, like the business plan of the company, like the Bank of Italy was really, they went really in depth in the numbers of the business plan. They really want to understand how the company will grow, if like how the business model will grow, how the business model will evolve. So they were like, from our point of view, like they took an approach that is like more, probably more common for banks or more structured financial institution, that like the crowdfunding providers that in Italy are SMEs. They are all like small company with I don't know, maybe 10, 11, 20, 15 people working. They're not banks. So the approach was really invasive on that kind of element, and lighter, for example, on the investor onboarding, which, by the way, was already complicated in the old Italian regulation, and they keep this approach. So in the end, what we see as operators is that it has been complicated, long, very invasive on some point in terms of like the request of the regulators. And today we are operated just for one service, like equity, as the other operators. We cannot like go abroad, and we will need to ask the regulators again in order to wider like the country in which we can operate. So what we see is a problem of competitivity of Italian players versus players from other countries where the authorization process and the regulators is more light in the request. And of course, for example, the UX, the user experience of the investor onboarding is it's quite complicated, for example, for Italian players compared to players from other countries. So like what is going to be from now in terms of competitivity because of the complication from the Italian regulators on the ESFPs, it's a concern that we have. I hope that this was useful, and of course, if you have like any question, I'm here.
Thank you, Edoardo. Just a note for the ones not from Italy, as Edoardo was mentioning, in Italy we have this complex structure with multiple authorities, and so while Consob has been identified as the one and the single point of contact as requested by the European crowdfunding regulation, and will be the one releasing the authorization for a crowdfunding provider, except when they hold already an authorization as payment service provider, or banks. In that case will be the Bank of Italy, the authorizing authority. But beside that, we have already also a division of competence for the topic that is relevant. So Bank of Italy is the one responsible for assessing the internal organization, governance, etc., while Consob for aspects aiming at business conduct and other topics not implying Bank of Italy competence. So it's very, very complex also, I think, for you in the dialogue between these two. They have a different way of thinking, a different approach. So if you were used to Consob, for example, in equity, okay.
It has been like really simpler to talk with Consob because we were used to do that, because like we already knows what they expect from like a service provider like ourselves. But the difficulty that we had like talking with Banca d'Italia, for example, is like to understand like the point of view that we're like starting from, because we were crowdfunding service provider. They were applying in our opinion frameworks that are usually applied to other kind of financial institution. That was sometimes a little bit of problem and a little bit of something that stretched the times, because I mean 5 months is not like a short period.
Thank you, Eduardo. So based also on Carsten data, we saw that also beside Italy, also Germany had some delays and few platforms authorized. So I'm asking to Tanya if she wants and also Carsten to share some of their experience in this regard.
Yes, hello, I'm Tanya from Osborne Clark, Germany, and I'm happy to give you some insights. Actually, Germany was very, very slow with licenses. There are several reasons for that. I think we will talk about the obstacles later, but so far there's only one company in Germany that holds an ECSP license, and actually Osborne Clark Germany was happy to advise them. So we worked together with BaFin on this very, very new regulation for BaFin. We know that nowadays there are 3 or 4 more open applications, but so far there's only one company called Zinsbaustein that holds a license. And they plan to go live with the first eCSP product this week. So this is very, very actual what's currently going on. Actually, to give you some insights regarding our experiences with BaFin when applying for a license, they were really, really reluctant. And this was kind of surprising because BaFin used to have a reputation of being very, very strict, but this had totally relaxed in the last year. They were very open to crowdfunding, very open to crypto. So the approach had really changed. But then eCSP license was something they were really, really reluctant on. And mainly what we thought, they even tried to convince Zinsbaustein to do something without this kind of regulation, something outside. And it was quite interesting. And we thought that they really want to wait until the ESMA guidelines have been finalized. Until this point, they did not really want to get out with a license procedure and did not want to develop an administrative practice. This was what we really felt. And but just we have a few things that came out from the administrative practice so far. It's still very, very moving and very much developing. The first thing was that private placements do not fall within the scope under eCSP for BaFin, which was quite interesting because they had the opinion that it's a private placement if the potential investors are selected individually. So we made jokes here saying, okay, all German millionaires, I have selected individually, but there are thousands, so this cannot really be in the end the main criteria. But this is so far, if it's individually selected, it should be a private placement. A second thing that came out was a fronting bank structure would not work under this kind of license, which is, because we have a lot of experience with fronting banks, with white label solutions. So in BaFin's opinion, this does not work under the eCSP regulation. And to be honest, there are still very many points, especially with regard to compliance, that are still open. It will be developed, but it's difficult for service providers to, if you do not know what you have to comply with. Like, for example, the knowledge test and the simulation of the ability to be a loss. Nobody really knows what is required. We know that from MiFID, but from MiFID, it's a little bit different. And we do not know, like, for example, just to give you a very practical example, if a customer says, I have sustainability preferences, like, for example, he would say that, and you had asked him, and then he said, yes, I do have that. And then from MiFID, we would then be required, the service provider would be required to say, oh, this product is not appropriate for you. But we do not know whether this is required within this knowledge test. So there are really, really many open questions so far. I think we will talk about the specific reasons from the German market later. So I will hand over to Carsten if he wants to add some practical experiences so far.
Yeah, thanks, Tanja. I think I totally agree with what you said, and also I think for us it was really helpful that you supported Zinsbaustein in getting the eCSP license, because it shows it can be done, right? So it was good for us to have Zinsbaustein being the first mover. I think one issue which our members quite often said was an issue was the liability regime. We will go into detail about this, but it was just changed recently, and a lot of the platforms were afraid that the liability regime is not going to work with most of the issuers. And this is maybe a comment because we're going to go into this specifically, but I think for Mindaugas and for Diego, I think there's a number of implementation issues which are relevant for the issuers. Like, they want to know what are the different liability regimes in each member state? What are the communication preferences? What are the data protection preferences? What are the cybersecurity preferences? And for some, ESMA has already released this overview, like the communication preferences. And for some other, I think, big questions, it's still open, like the liability thing. So just to give a practical example, one of the platforms which operates in Germany called is Investor. They have a license from outside of Germany, and in their contracts with the issuer, they simply put that the issuer is required to check how the liability regime works in all of these 27 member states. But I don't think they are, most of the issuers, most of the SMEs, I don't think they're able to understand the nuances between these kind of things, but it's very practical for them because they can be, go to court and be sued and have to pay back the investors, etc. So I wanted to say this is still a major obstacle, that there is some areas where the ECSP law is not harmonized yet, because the member states, it's subsidiary principle, etc. So this is a big obstacle, but at the same time, there is not an overview about what are actually the rules on the ground. And so I think for the ECSP to become a success, for the SMEs, there needs to be a very simple way to understand their obligations and duties and rights which they have under ECSP if they're using a platform which operates in all of the 27 member states. So this was just, Eugenia, maybe a comment for the later discussion. I noticed one thing that I didn't mention also in my talk. There's a lot of regional networks. So for instance, we have a lot of Austrian platforms which are operating in Germany. I saw that Czech Republic and Slovak Republic, for instance, they applied for cross-border licenses in those countries. I saw lots of Italian and Spanish platforms applying for each other's jurisdictions. The Scandinavian platforms, usually they also apply to the other Scandinavian countries. So it's quite interesting. The only exception which I saw was Bulgarian and Romanian platforms, because they tend to collaborate a lot with platforms from Western Europe, like from the Netherlands, in order to be able to work cross-border. So Eugenia, maybe this is another interesting topic to discuss, why platforms are mostly staying within their local market, except for very few countries which go abroad immediately. Thanks.
Thank you. Very, very interesting. On the cross-border side, I think that it's very interesting that you have few authorization in Germany, but you have Austrian platforms accessing the market. I mean, from a competition point of view, it's very, I think, relevant. I have a question for you in this regard. Do you think, I mean, if I'm correct, you will still have a national regime for platforms that are operating outside the scope, in particular subordinated loans, that was your main business model for restriction and the banking law, etc. But so my question is that do you think you will have the main national market, let's say, dominated or with platform subject to the national regime, and so this is why you have few platforms applying for the European one?
I mean,
yes,
maybe...
actually, just to give you a little bit background, and Carsten, he knows so much more about the numbers, but just to give you a little bit background, the subordinated loan, this is a very, very special German thing, and historically, it's a little bit stupid because it's not good for the consumers, but historically, because it was simply not regulated, the whole crowdfunding market a long time ago jumped onto the subordinated loans. And so pretty much we had a few who tried to do different stuff with securities, etc. But mainly peer-to-peer lending and subordinated loans are definitely the largest, subordinated loans even much more. And historically here now, the German or the national crowdfunding regulation mainly only promotes subordinated loans, which is crazy because it wasn't good in the beginning, but now it's mainly the national regulation is based on that. And which was quite interesting because in this legislation process of the ECSP regulation, Germany in the end had a submission to the EU saying, please explicitly say that it is required to be a loan under ECSP to have an unconditional claim, which simplified only meant that subordinated loans will not fall under the ECSP regulation. And so far, the biggest, absolutely biggest market in Germany is still the subordinated loan. And it's very, very common. And it's, you know, if you compare it with such a hassle with a ECSP license, I can totally see the point, because it's a very, very easy regulation in Germany, very low level. It's just under the local trade register, and it's very low level. You must apply AML, but simplified, that's it. So far, I do not really see that the crowdfunding service provider, the crowdfunding platform that do not really want to work cross-border, they would simply stick with the national.
Yeah.
I believe so, Carsten.
Yeah,
go ahead. You know,
no, just really quickly.
than I do.
Yeah, totally agree. I just want to say, so out of our 40 members, I think we have now 5 which are going to transition into the ECSP regime. So the rest of them are going to stay in the crowdfunding exemption. The level of regulation is, in that sense, they're not supervised by the regulator, but the level of due diligence is similar. And I think for the platforms, the main reason why they stay out of ECSP is the German market is big enough to sustain their local business, and they have everything ready. And so for them to transition into ECSP is not attractive enough yet. But our association is working really closely together with the German government, and there are some talks whether to align the requirements under the ECSP with the German crowdfunding exception. I think this is also happening in a lot of other countries, that where there is still a national regime outside of the scope. What I hear from talks with the associations and the ministries, etc., the ECSP is going to provide like a blueprint for how to also regulate the crowdfunding regime for those platforms which stay outside of the ECSP. That's just my 2 cents on that. Yeah.
Thank you, Carsten. I see Ella van Kranenburg that has a question for them or in general.
Yes, thank you, Eugenia. It's actually sort of tying on or following your comment that you see, and also what Carsten is referring to, let's say, regional developments where perhaps you see in Germany a lot of Austrian platforms engaging in your market, and it seems the way Germany is now operating, you may sort of be placed out of market if, let's say, Austrians enter your market through this European crowdfunding license. And do you believe, it's possibly for Tanja and Carsten, that there will also, because we do believe there will be a lot of consolidation in Europe, that there will be platforms that are really too small to survive, so they will find counterparts probably in other European countries as well. So let's say I'm a big Austrian platform and I see a competitor in Germany, knowing that party cannot operate cross-border, I would certainly be very interested in getting into talks with that platform. So ultimately, you might actually lose market as regard having German licensed platforms. How do you see that from what you were just saying, both Carsten and
my personal opinion is the market is going to grow enormously, because not just because of the ECSP, but also the national market is growing. I mean, we have the data. We can show that everybody seems to be working fine, even though we have all these global crises, etc. The volume of crowdfunding every year grows, and I think it's partially due also to the fact that we have more and more collaboration between banks and crowdfunding platforms. So I'm not so much concerned about them. And Florence and I, for instance, were talking about this. We want to actually facilitate collaboration between French platforms and German platforms and establish more joint ventures, more joint funding rounds, etc. So I'm not. What I'm more concerned is about the speed of the licensing, where some of our members have had their licensing for 9 months already, and I mean, Diego and Mindaugas, you know, the rule is 3 months. 3 months is usually, you know, when you have all the documents ready, the NCA has 3 months to say, you know, whether you receive the license or not. But BaFin and many other NCAs all over Europe have been doing all kinds of tricks to delay the final decisions about ECSP platforms. Some have been really quick. Latvia has been really quick, Netherlands, etc. But I think in at least 20 member states, we have seen national authorities trying to delay the licensing process. And that's a huge problem, I think, for the market, because Tanya and other people, lawyers who are working with the platforms, they are really good in preparing all the documents. It's not, I mean, at the end of the day, it's all in the RTS. You know, there are still some nuances, but I think in the end, it's just, you know, have to sit down and get all the documents in one place and submit it. But because of some issues which are unclear in the legal text, there's a lot of delay, and I think that's the major hurdle from my point of view.
Yeah, I love the 3-month rule. It's because we have young associates that tell our clients, they must answer in 3 months. So it's 3 months is written in the law, but it's in practice it simply doesn't exist, because the 3 months they start with a complete application, and you know who's going to consider when it is complete? BaFin. So they can simply decide when the 3 months period starts. So that's a trick that Carsten just mentioned. But besides that, I also see a chance with that, a positive development, because I remember that when crowdfunding started, there were a lot of Dutch crowdfunding platforms. We call mostly Dutch and also Austrian platforms that wanted to enter the German market. And they wanted, in the end, they were so depressed and they decided not to do that, not to follow up with that anymore, because they had some structures implemented in their home state, and then they came to Germany and it was like, what? You have GmbHs, you have this complex stuff with the notaries, you have the subordinated loans, how does it work? So it was so different. So they went back to their home countries and did not really enter the German market. So as Carsten just said, I see a chance now. I see a positive option here that more EU crowdfunding platforms now would enter the German market, and to cooperate maybe with already existing platforms, because it's not only restricted to the subordinated loans anymore. So it should be better, I hope.
Thank you. So before moving to another country, I see that Konstantinos Ferdaris has another question.
Yes, hi. Just a very short question on the situation of crowdfunding platforms in Germany, because even at the beginning, when the CSPR entered into force, one of the main concerns, according to my view, was that, especially due to the business model followed in Germany, and more specifically, because of the financial instruments that are being offered there, that mainly consist of subordinated loans and profit participating loans, there was a lot of maneuver to avoid falling under the scope of this ECSPR, given especially that the market was already big enough in order to sustain a big enough market for crowdfunding platforms there. So one question that I had, and perhaps a suggestion for the European Commission, could be, do you think it would be possible to extend the scope of financial instruments which are being covered by the CSPR in order to include this kind of instruments which are currently being offered by crowdfunding platforms in Germany, like subordinated loans?
Actually, as I just said, it was explicitly removed or clarified, because it was, at the beginning, it only said loans, and you could discuss whether a subordinated loan is a loan, yes or no. So in Germany, it is considered a mezzanine product, and it's correct, it's a mezzanine product. It's not a real debt. It's kind of mezzanine because it's something in between equity and debt. And that's why the very wording, the definition of loan under ECSP, explicitly states it must have an unconditional claim for repayment, which is explicitly not the case with the subordinated loan. So I believe it was definitely by purpose from the German, it was a submission of Germany to exclude those.
Thank you very much. So talking about other national differences, we probably in the data we don't have much on about Nordic countries. So I asked to Thomas or Cecily if they want to report the situation over there.
Thank you, Eugenia. Thank you for arranging today's discussion, first of all, and for inviting us. It's correct that I have Cecilia with me today. Cecilia and I are cooperating at Aalborg University on crowdfunding regulation in Denmark. We have a small interest in Norway, but we, for the commentary, wrote with Elif Härkönen, who has a particular interest in Sweden and Finland. So I'm reporting mostly from Denmark, knowing that we lack the knowledge because we lack Elif's presence today from Finland, especially, and Sweden. But ECSPR has been living a quiet life in Denmark. We've been trying, Cecilia and I, to push that it was coming. The platforms in the beginning, the few platforms that we have, actually thought it was a voluntary regulation, that if they wanted to do cross-border activities, then they would have to apply for the ECSPR permit. But of course, quickly they learned that it was mandatory. And thus far, we have one approved platform. And I've spoken to the supervisory authority in Denmark, and they have informed me they have rejected one as well. I don't know any details, but I know we have two more in the pipeline, which almost covers all the platforms that are active in Denmark. As was indicated earlier, there is especially one platform operating across the Nordic countries, which is Cameo, which has a ECSPR license from Sweden at the moment. It's been really difficult to get in dialogue with the supervisory authority in Denmark. I think it's because it's a new regulation. They lacked in-house competences. They have been really defensive almost in their dialogue with us. So we know almost nothing about how the supervisory authority views the ECSPR. To my knowledge, that one platform who has a permit didn't even pay for that permit. Despite general regulation that any financial permission or permit in Denmark is subject to payment. And only just recently have they recruited people with some sort of knowledge in this area. So it's been a very quiet life with the supervisory authority as well as with the regulators. There has been nearly no consequential changes to the legislation in Denmark, which one of the big obstacles that I see is that equity crowdfunding is basically prohibited in Denmark still. We have a prohibition that private liability companies, which is basically every SME in Denmark, cannot offer its shares to the public, which effectively bans them from using equity crowdfunding in Denmark. And hence we only have loan-based crowdfunding platforms in Denmark, with one exception. The Many, it's called, who operates a alternative investment fund where you buy a share in the fund and they own real estate that you then have a share in the rental costs. there is should we remove the prohibition for private liability companies to offer their shares to the public, we still perhaps have a barrier in a less favorable tax regime once you are 8 people or more in a syndicate. So crowdfunding examples, for example, you are then subject to less favorable tax regime, which could be an obstacle as well. But at the moment we have no equity crowdfunding experience. So yeah, life is quiet in crowdfunding in Denmark, and as regards to Norway, hence them not being 100% EU member states, they are still considering implementing the ECSPR. And to my knowledge, from one of the lawyers from one of the Norwegian platforms, it seems like the political will is that they will implement it, but it's also perhaps on purpose a very, very slow implementation process. So they're not it's not going to happen tomorrow or next week.
Thank you, Thomas. Very, very interesting. I think you raised also a very important issue. I don't know if we'll talk about it later, but about the treatment of shares of private limited companies. It was very complicated and fragmented before the crowdfunding regulation. In principle, we had a solution in the new category of instrument admitted for crowdfunding purposes, but we know that again it's every country should decide whether to include the shares of their private limited company in the list of these new kind of instrument, and anyway subject to the condition that is there is no obstacle to the transferability, and again the offering to the public or the need to go to the public notary or to have other shareholder meetings or other forms of consent might be considered an obstacle, and everything is subject anyway to national company law. So it's a very complex, but I think this underlines again potential fragmentation again in this subject. The same for bonds or other not equity issuance by these kind of companies, because we can have the same limitation in the offering to the public, but in this case they could not be considered instruments admitted for crowdfunding purposes. So there's no way in this case to overcoming the differences. I see Anne that raised her hand.
Yes, actually, sorry, this is Anne Hopford speaking of FG lawyers in the Netherlands. I have a cold, so I'm sorry for my voice. I wanted to respond, but actually, Eugenia, I think a part of what you said is already covering my comment or my question, because both the statements made by Tanya from a German perspective as well as by Thomas from a Danish perspective, I find it very interesting from a passporting point of view. So if you say, Thomas, for example, that there's no equity crowdfunding from a local national restriction, so to say, on the Danish law, would that also impact crowdfunding service providers that have obtained a license from another national competent authority and have passported that license in accordance with the crowdfunding regulation?
Yeah, the way I interpret it, and Cecilia, please supplement or correct me if you disagree. The way I interpret our prohibition is that a private limited company cannot offer its shares to the public in Denmark. So a foreign license holder offering crowdfunding services in Denmark would not be able to sort of circumvent that prohibition. But Danish companies can offer their shares on foreign platforms to foreign markets, but they can't do it in Denmark to the Danish market. So what we see at the moment is that those who want to, their private limited companies are using either British platforms, moving completely out of the EU, or they go to Finland, where they do not have this prohibition.
That's interesting, right? Because it feels like kind of gold plating from a local law perspective, or in any case, the passporting possibilities that is offered by the crowdfunding regulation cannot be fully used. And the CSP, I don't know who said that, but that the overview is missing. I think Carsten said that the overview is missing of per member state, what as a project owner, but same for a CSP, I think, an authorized CSP, having obtained that license and having passported duly under the crowdfunding regulation, you need to know what you well, whether or not you can actually offer, make the offer in the respective member states. In respect of what Tanya was saying, what I find interesting is the discussion. Of course, I'm aware of the subordinated loans discussion and the structure that was used in Germany before. I'm quite intrigued by the fact that it's still upheld. So from a Dutch law perspective, I don't think that a subordinated loan would be treated differently by the regulator than a regular loan. It's just a loan, you have to pay it back. And it's not, although it says unconditional in the recitals, I am aware of that, but it's still a repayment obligation, as long as Theo is but as long as it's not converted into an equity product. So it's interesting. You know, it's just what it is, I think, but it's interesting to see that member states are still, and national laws are still putting their own ideas well, on something that we wanted to, you know, on a framework that we wanted to get harmonized, which essentially it still isn't, is my, well, quick conclusion.
Yeah, BaFin has a very clear administrative practice on that, to say that it's not an unconditional claim for repayment. That's just to give a little bit background. In Germany, for example, lending business is regulated, highest level of regulation. You need a real banking license for that, but you only need it if it's a conditional repayment claim. So if you have subordinated loans, you don't fall under the lending business. So it's very, in this case, BaFin is very compliant in all over its administrative practice. So it's not a lending business, it's not a loan, it's a mezzanine product. So yeah.
Yeah, I think it was, as we discussed before, a way to circumvent, let's say, the very large bank monopoly or like reserve of activity of banks, etc. So it was a way to allow crowdfunding in the country. So now probably it's difficult to say, okay, it's not so conditional as we thought, etc. We will change our point of view and perspective, but it's very interesting that we have so many differences still, despite the larger harmonization. So there was also a question about Portugal. So I will call Diogo Pereira Duarte in this respect, that is an expert of crowdfunding in this country. Please, Diogo.
Eugenia, thank you so much. Hi, everyone. It's a pleasure to be here. And Eugenia, thank you for inviting me for this webinar, which is very interesting and very productive. In fact, in Portugal, I must say with sadness that we have an unfortunate story with crowdfunding. And once again, we delayed in the implementation of the CSPR, the national regime executing the European crowdfunding regime was only approved in August. So although the European crowdfunding regulation is in effect since 2021, only after 9 of August was possible to apply for an authorization under the European crowdfunding regime. And I believe that explains a lot why, according to the data Carsten showed us, there is no license granted by the Portuguese National Authority, which is the Portuguese Securities and Exchange Commission. But nonetheless, there is in this national regime, the Decree Law 66/2023, a transitional provision saying that the platforms that were already authorized under the Portuguese regime can apply for a simplified procedure to get the authorization if they submitted until the 10th of November this year some sort of documentation like a new program of activities, the demonstration that they comply with prudential safeguards, and a declaration saying that they comply with the European regime, and adding the policies and procedures amended accordingly. And since we had before under the Portuguese regime 4 platforms authorized, exclusively operating in loan-based models, I believe that these platforms that continue their activities here in Portugal should have complied with this transitional provision, meaning that until the 10th of November they should have submitted this documentation with the CMVM, the Portuguese Securities and Exchange Commission. Just to give you a very brief flavor on the new regime arising from this Decree Law 66/2023, I would say one first important feature is that the CMVM, the Portuguese Securities and Exchange Commission, is the national competent authority to approve the licenses under the European crowdfunding regulation. Even if credit institution payment services differently from Italy, as I understood, even if they want to apply for this license, is the CMVM the competent authority, which shall coordinate with the Bank of Portugal to the effect, and is the competent authority for the supervision of the regime. A second important feature was that the previous financial return regime that was applicable under the Portuguese regulation was completely revoked, meaning that it was replaced by the European crowdfunding regime for the distribution of securities and loans, apparently not allowing other types of instruments, such as subordinated loans and other types of equity-like agreements and non-remunerated loans, which were permitted under the previous regime. And finally, we have a new regime on civil liability for breaches in relation to information duties, which appears to be very burdensome. We can discuss this a little bit later. Thank you.
Thank you very much, Diogo. I think that now we can move to the 2 countries that have the most licenses, so France and the Netherlands. I don't know who wants to start.
I can start.
Fantastic, thank you.
Thank you for the discussion. It's so interesting to have everybody around the table, and I don't know where I should begin, but yeah. So Kirsten said we have 37 platforms that have the license in France, but it doesn't mean that it's easy to have its license in France, not at all. And but perhaps I think that perhaps the adaptation was easier than for the French crowdfunding platforms, because we already had experience fairly strict regulation in France. So perhaps in comparison to other countries, the regulator already know what was crowdfunding and was aware of how does it work and what is this business. And so we were quite well accompanied by the French regulator in this regulation, in this process, and also yeah. So that's the application for the legal framework was in December 2021. So quite a long time ago compared to others. And we work together with the platforms and the regulator to understand the European regulation, and the European the French regulators organized quite several times some webinar to explain how does it work, what was the deadline, and when the platforms had to apply. And they really said to all French crowdfunding sectors that they should apply before June 23 if they want to have the license in time. Because as we said, we had 37 licenses, like 10 are new, but at the beginning we have like 60 or 70 crowdfunding platforms in France. So it means today that there is around 15 platforms that doesn't have the ESP yet. They are still waiting for the statute to operate, and they had to stop their activities. So, and I guess perhaps it was, I mean, one of the difficulties was that as for Italy, actually it's quite, I see lots of similar things between France and Italy, as we also have two regulators, and it's quite difficult to deal with it, because so there's the regulator IMF, which is the main contact, but for all the crowdfunding platforms that want to do loans, they also have to ask the opinion of the regulator for bank establishments, and these regulators had really strict really strict requests for the crowdfunding platform for internal control. All crowdfunding platform has, and all the request of the bank regulator was also asked for the platforms that are not doing loans. So it's becoming something, a standard for every crowdfunding platforms. Like for the crowdfunding controls, it's very strict, and all platforms has to have a service provider, external service provider, to check the different level of control. Yeah, some things like that are very and the regulator has lots of invasive questions on the business, on how does it work, on who is the government of the crowdfunding platforms, and so on. So it takes more about 9 months to get the license. So yeah, and some are still waiting for their license, and they applied like 12 months ago. So quite a long process to have it. And some decided to stop the activities, but this is like business. So yeah, that's it. And perhaps yeah, so Carsten talked about speed and agility, cost, and licensing readiness for the three main reasons for platforms to go abroad, just to apply for in another country. So for sure, it can be in France, it can be licensing readiness, but not so much speed and agility, because it's quite tough. And regarding, I'm quite surprised that in other countries there is still a national law, because in France, the French statute disappeared. The 11th of November, this statute completely disappeared, and we had a special thing, but it was not so used, so that's why it's not exist anymore. But we had a kind of loan called mini bon, which was really special for crowdfunding, and this mini bon disappeared because the regulators, French regulator, didn't wanted to have a special regulation for a really specific tool, financial tool, and it was not so used by the platforms, by the way. So this disappeared, and now there is no other way to do crowdfunding, to do lending and equity than having the European license. So yeah.
No,
so
also,
yeah.
Just a quick question on this, since we will talk also about residual national regimes. It was my understanding that France kept a national regime, but only for interest-free loans and not for profit activities funded.
Yeah, we had two statutes, and one which called intermédiaire en financement participatif, EFP, is still remaining, but yeah, it's only for donation, reward, and lending. And before ECSP, it was also for lending with interest, and now it's not for lending. It's just for lending without interest. Lending with interest is going through European license. But yes, these statutes remain for sure, of course.
Okay, thank you very much. I don't see Moulin, that was probably has problems in joining, so maybe I will call on him when he can join. But maybe we can move to the, or Florence, do you have other?
Yeah, no, I was just thinking that also French crowdfunding platforms also had sometimes to ask for just for equity or bond, but not for loan, because it was so really longer to have the license with the second regulator. So this is also a constraint we had to operate, because yeah, with the two regulators in front of you, it make really much more longer to have your license than just one. So some platforms decided not to do loan for the moment, and that's why also you have just 5 French crowdfunding platform apply for other countries. So it's really few. Upon 37, just 5 are willing to go abroad. But it's also, I think, we will have more demand of working abroad in the next months, but because it was also a way to have the license easier, to just focus on France and after see if there are other countries to develop. But first, to have the license in time, just focus on France, just focus on what you want to do as a security or a loan or equity or bonds.
Yeah, indeed, very similar to what also Eduardo experienced in Italy. And I think that's the weird thing, let's say, that is in France, you had already a special regime for loans that instead we didn't have in Italy, because there was like special interpretation of existing traditional laws, let's say, while at least you had a special regime. There is also a question for you, Florence, that if you know how many platforms in France had to stop or decided to stop their activities, probably while waiting for applications.
To stop while waiting, I think there are between 10 and 15, and who stop and will not and are not waiting anymore. I would say between since 1 year, between 5 and 10.
Thank you very much. So maybe I can ask Anne to report about the Netherlands, that you have a lot of licenses.
Yeah, thank you very much, Virginia. Indeed, Costa referred to some data. I just checked the register of the AFM. I think a small number of additional crowdfunding platforms were granted their authorization in the meantime. So I think we have 17 authorizations currently. as well as 16 incoming passports. So that says something about apparently the interest for other countries in the Netherlands, probably mostly based on the fact that English is accepted by the AFM, so the Dutch regulator, as a language to be used by foreign CSPs and project owners, and the ease of well, speaking the language in general in the Netherlands. That being said, I think also I think one of the reasons that we have quite a number of authorized crowdfunding platforms already is because the AFM reached out to the existing platforms in a very early stage. So they anticipated on what was coming, which, to be quite honest, from a personal perspective, raised some eyebrows from my side, because the AFM, the regulator, requested all the existing platforms in the Netherlands to apply for the license before the 10th of May 2022. So they anticipated on the original deadline of all the platforms needed to have the license in November 22. Eventually, in July 22, the decision was taken that the transitional period was extended. But obviously, most of the platforms in the Netherlands that were already authorized before had already submitted their applications. So and they were already in the process of getting the authorization on the under crowdfunding regulation itself. So I think that's actually the main reason that we have quite a number of authorized CSPs already. I do have to say as well that the AFM was very proactive. Someone said as well, I think it was Florence just now, in respect of France, that the AFM also organized webinars to explain what the crowdfunding regulation would mean. They asked for platforms to raise their questions in advance, so to learn from the market, to ensure that the processes would be running smoothly. Because the AFM was one of the first regulators reaching out to the market and being in the process of getting those licenses being approved, they also, like the rest of us as advisors and the CSPs itself, sometimes were in the pioneering sphere, so to say. So we touched upon questions that had to be raised eventually via ESMA to the European Commission, because we simply didn't know how, the AFM didn't know, we didn't know how to deal with that. And one of those was, for example, how to deal with the PSPs, the exemptions that were available under the Payment Services Directive, but were not really taken into account, or not really clear what it was taken into account in the crowdfunding regulation. So it had two sides. So I don't think that the process itself, referring to the comments that Karsten made, that the process itself with the Dutch regulator was particularly quick or agile, or not very costly. I'm not sure about that, to be quite honest. The 3 months period, I haven't seen any of my clients being able to get the authorization within the 3 months, but that's if you compare it to other authorizations under other, MiFID or any other type of license, it's the same thing. So irrespective of that deadline of 2 months, by the way, right? It's not 3 months, it's 2 months, I believe, in the crowdfunding regulation. Doesn't really matter, but it's normal. Also, what Tanya said, that they only take into account a complete application. They decide themselves when it's complete. And then even if you have it in the process, the moment there are questions raised, the time is, or the clock is being stopped until you've raised or you've answered the questions again. So it's just something, the process itself takes longer than the actual period of time that's given in the crowdfunding regulation. Yeah, maybe that's sufficient for now from the Dutch law, or from the Netherlands perspective. Thank you.
Thank you, Anne. I don't know if Ella wants to add something about Netherlands, or professional experience.
Yeah, sorry, I was on mute. Yes, what should I add? From the experience I have, I think the platforms that had like in their structure prior to the crowdfunding regulation some very, let's say, built-in systems which were very much not aligned with what the ECSPR was alluding to. And knows my particular client who was facing troubles because they actually had a MiFID license already, and they did not use a PSP for payments because effectively the money was collected with a notary, and subsequently that notary would then divert the money to the project owner, and then the crowd and the project owner were literally on their own. And because the project owner would then pay interest, these were bonds. So that seemed to work. I was not involved in setting up the structure because I always had some doubts about the role of the notary here. But I actually tried to argue with the Dutch AFM, well, can we even see a payment service being provided in this particular case? Because I didn't see it. And I think the AFM sort of agreed, but this was effectively a question for the Dutch Central Bank. Though while we have like and the Dutch AFM as the primary supervisor, this specific question was laid down with the Dutch Central Bank because payment service providers are regulated by DNB. So DNB said, well, when I'm looking at the crowdfunding regulation, I don't really care that under MiFID this is okay, but from the crowdfunding perspective, I see that you need a PSP. So effectively, my client ended up sort of resetting the whole IT infrastructure. I think that's probably what cost them most for this whole project. And then in the end, they actually did not use a PSP, but they used the exemption that Anne was referring to. They actually use another MiFID licensed investment firm that, on the one hand, does the safekeeping for the assets, and on the other hand, does the payment for the platform or for the project owner and the crowd. And that was accepted in the end because the commission said that was an acceptable route. So thank you, Anne, for following up on my question, because that helped my client in the end. So that there you can really see that the let's say the prior structure of the platform was really not fit for purpose within what the ECSPR was looking for. Yeah, I think that was the most typical issue. What I also know, and that's a platform where I'm actually on the supervisory board, I think there are relatively few platforms that go to the have opted for the portfolio management structure. And actually this platform has a MiFID license. They probably will get rid of it because they have relatively small projects. So that allows them in the future to do only loans, because as you know, portfolio management is only allowed with respect to loans. And I'm really wondering how that particular market will develop. I think from a commercial perspective, that's quite interesting to see, because you can see that where you have projects that go in and out, specifically when you have loans or bonds which need to be repaid, if you have this portfolio management system, the money actually, you can keep it within the system, as you like. So that's another development that I'm quite keen to follow.
Thank you, Ella. Meanwhile, there's, I think, an interesting debate in the chat, because just to recall also to the rest of the public, there are certain aspects of the application of the crowdfunding regulation that are left to national competent authority, the application of the proportional principle in supervision, and there is also an issue of fees. So how much it costs to get the European crowdfunding authorization compared to other traditional and national regimes. So here there's Carsten reporting that in Germany for European crowdfunding provider should be 6,000 euro. In the Netherlands, maybe I'll leave the floor to Anne, but in France is 2,500. In Sweden, 17,000. in Portugal 1,000. So very different from one another. But I leave the floor to Anne and also
Yeah, well, I actually indeed find this very interesting because the AFM has not a very, for the platform itself, not a very helpful system, because they charge by the hour 200 euros with a maximum of 75,000 euros. So if I hear and I read 1,000 euros for a CSP license, I think I'm going to recommend my clients to move abroad, because this is totally different. But what I wanted to briefly comment on, as I think as a concluding statement, probably before we move to the next subject, or perhaps a short break, but it's up to you, Julia. What I really find interesting as well is that the fact that we have had crowdfunding being developed over years, 10, 15 years, and some of the member states have created national legislation to enable crowdfunding generally. You now see that a European regulation, which is obviously meant to be or intended to be to provide for a European harmonized framework, is not working out well, just because we have these national systems in place already, and apparently the business models of the crowdfunding platforms have been tweaked before to ensure that it could fall under certain regulation or an exemption on the national law. So this is just a conclusion on the basis of what we hear during the discussion, which I find very interesting. And obviously, a European framework never comes before, I can't say never, but generally the process, of course, is that something is developed and then law is being made, and it's more common that first national law is being made before a European regulation is being made. But I think this is one of the lessons learned generally, that for specific processes, it may be worthwhile to look at a more European, with a broader European view, rather than just focusing on national member states.
Thank you, Anna. Just strictly linked to what you were saying, we mentioned several times the survival of national regimes. So we listened to also to Diogo and to Florence about residual national regimes. Of course, in theory, would be for products and services not covered by the European crowdfunding regulation, since it's a maximum harmonization instrument. But I think, unfortunately, we don't have here Hilif, but my understanding that in Finland they kept a national regime for loans, offering of loans above 5 million, because they would not be covered by MiFID, since we are talking about loans, and will not be covered by the crowdfunding regulation, because there is a prohibition to offer above these. But I find very, very interesting that they discuss maintaining for product services covered by regulation, but above the maximum threshold. So I don't know if anybody wants to maybe make a comment on different national regimes in the countries we mentioned, or also in comparison with their own country.
Just perhaps to react, I find it really bizarre that there are different national regime for lending and equity that still exist. And it was really, it was really a pain for French crowdfunding platforms to apply for this license, because they were able to raise up to 8 million euros, and now they are able just to raise up to 5 million euros. And if they want to raise more, they have to ask for another license to be investment service provider, to have MiFID license and more requirements. But they can't just avoid this European regime. And I think we have still some work to do to have a real harmonization, because we see that in application, in everywhere, there are really a lack of harmonization in this regulation. And yeah, that's all. That's my comments.
I see Ella. Please.
Yeah, well, going back to why this all started, this was all about getting the capital market union working, right? And now, effectively, anything that's outside of the scope of this crowdfunding regulation, I can see that you make something for, let's say, national regulation, anything beyond 5 million, which is not within MiFID, but still apparently attracts crowd. I can understand that you're doing something on national level. What I really find concerning, or really not really surprising, but still concerning, is that we have so much different interpretations of what this regulation means. And that's really going to be very much a question on how can we actually facilitate passporting in a way that both the platform, but in the end also, of course, the project owner and the crowd, to know that we're operating in the same field, which is what we think. But when all listening to what we're all telling, that does not seem to be true in practice. And maybe that's also, I'm looking a bit at ESMA and the Commission. I think there's also perhaps a task, or let's certainly invoke these discussions to make sure that we can meet each other, so that this is really going to work in a European level, right? I mean, that's what we want in the end.
Thank you, Ella. Talking about ESMA, I see that half an hour ago, I think Laurent Tristan joined us. So I just to tell him that whenever he wants to participate, do not hesitate. You're free to take the stand and participate to each discussion. So thank you. I see you now. Hi, Laurent. Thank you again for joining.
I think, hi, thank you for having me. I think the point which was just raised is maybe more a point for the Commission, in the sense that it's harmonization or lack of harmonization, depending on you want to see it, on the level 1 text, even though I'm sure my colleagues from the Commission would say that their initial proposal was aiming for a much more harmonized regime, and that's and what we're dealing now is the outcome of the political discussion. But I don't want to talk on their behalf. But I'm happy to take points later on maybe more on the application side. With respect to the actual legislation, I will let my EC colleagues take the lead. Thank you.
Thank you, Laurent. But that probably now the moment to talk about the information to be provided to investors. So we had also a question about the key information sheet, and one of the issue that maybe it's linked to what we have discussed about competition and differences among countries is language, as well as the marketing rules that we know are decided at national level. But about the language, I don't know if you have had a look at the reporting to ESMA in this regard, but there are, for example, in Italy, we chose as a language only Italian, while in other countries they picked also English, like if I'm not wrong, Portugal, Spain, Croatia, Hungary, they chose also English. So what do you think about these differences? And maybe I ask also Diogo if I'm correct, and Portugal has decided also to allow English in key information.
Yes. You are correct. English is allowed, and also another language that the CMVM authorizes. So I think that the approach is very similar to other areas of the capital markets, such as the language in kids. English is accepted, in fact.
Carsten, I see your hand is raised.
Yeah, Just really quickly on the KISS, one of the things which I find quite difficult is that there is no central database for the KISS. So what I'm doing right now is I'm going to all of the 110 platforms and downloading all the KISS documents, but sometimes they are hidden behind several layers of having to log in and retrieving the information. So it's not at all easy to use the KISS for comparing offering under ECSP. And so this is a problem for academics, but I think it's a big problem for investors as well. And it's also, for me, not clear which member states have required the platforms to submit the KISS to the NCA before they're being published. Some member states have done so. BaFin hasn't done so. They have said they don't want to do it. But I think this is a huge problem because in some countries, you have all that information. In other countries, you don't. So I just wanted to mention this topic on the KISS.
There was also a question about the KISS in the chat. I was trying to retrieve it. It was about anyway, if I recall it correct, about the forms. This might have changed compared to other countries because now we have, templates that the platform needs to comply with. So I think that the question was whether they can use different forms like PPT, etc. But now it was that maybe in other countries, also in Italy, that was quite freedom. There was they could use different forms, PDF, video, catch, etc. Now it's very mandated by the regulation. So if I remember correctly, the question. I don't know if there are any in this regard. Yes, Florence. Sorry, I didn't see.
No, but perhaps just to react regarding what Carsten said. I think, I don't know. For me, it's just an option for the regulator to ask for the KISS 7 days before it will be published and available for investor, but it's not compulsory. And after it, but I think it should be something we all discuss about for the review of the application, because technically, operationally, it's really tough for the crowdfunding platforms to make this KISS available 7 days before. That depends of the financial tool you use. But for small loans that have to be given quickly to the project owner, it's not really realistic to have this before. And as Carsten said, we will have some an harmonization around Europe, because some regulator will ask for it sometimes, some all the time, some never. So I think this is something we have to put out of this regulation.
Yeah, indeed, it is one of the national discretion, and there has been differences in this regard. But I see Roberto, please.
Yes, thank you. Thank you, Jenny. First of all, nice to be with you tonight, and thank you for inviting me. I find really interesting this comparative discussion about the implementation of European regulation. Just like to add a little piece of information about the Italian framework concerning the key investment information sheet, because if we look at the Council regulation dating back to 1st of June 2023, we see that, first of all, CONSOB requires the crowdfunding service providers to publish the keys and at the same time make available the sheet to CONSOB. Therefore, there is an obligation to notify Council of the keys. And with regard to the language, the Council regulation requires that the keys is drafted in Italian. So there's no room for any other foreign language. Hope this helps the discussion.
So at least we don't have to provide it in advance. It's at the same time investors and
no prior notification, but the obligation to make available at the same time the keys.
Okay, thank you, Roberto. I think one of the big discussion related also to the keys is liability for the keys. So we know that in the regulation there is an obligation for member states to make, let's say, available a civil liability regime in relation to the project owners and of course, executives, etc., bodies within the project owners. There's nothing in relation to the platform itself. That's a big hole. It's similar to the provision in the prospectus regulation in relation to UNIs. It's a minimum. There's no indication, of course, of who else can be deemed responsible. So I think that we have Carsten about this, but then, of course, everybody can share their point of view. Thank you, Carsten.
Yeah, thanks so much. Yeah, just really quickly from my side, the civil liability issue was a big problem in Germany because the right now for a normal prospectus issues, the civil liability in Germany is reduced simply for gross negligence and just for the issuer. So it's a very good regime for SMEs, etc. But then as part of the implementation law, 2 years ago, it was decided that the CEO of the company issuing the KISS, so the SME or the platform releasing the KISS would be personally liable with his personal wealth for the whole funding and under simple negligence, so even translation errors, etc. And that caused a big problem. Even BaFin admitted that it was actually a killer. It resulted in lots of people not applying for the ECSP because the issuer said that's something we cannot do. And this has been changed now in the so-called Future Financing Act, and that's good. But what I noticed, so the new law, which is going to be in place 1st of January 2024, is going to be the fact that it's just going to be the issuer for simple negligence, which is not perfect, but it's not as bad as beforehand. However, the legal situation is that every ECSP offering, regardless if it's on a German platform or not a German platform, if it's targeting German investors or non-German investors, or if it's by a company inside Germany or outside Germany, doesn't matter. As long as is there a German investor in the financing round, right now, the CEO is personally liable with his own personal money for the whole funding round. So if it's a 3 million funding round, he has to cover these 3 million with personal liability. And we try to reach out to ESMA, and Laurent and I talked about this, and to Diego and Mindaugas from the Commission and so on. So we talked about this quite extensively, that what is missing is the fact that it's very difficult to understand what are the liability regimes for the SME owners. That's a real big problem. The last comparison regarding civil liability for prospectuses is a few years old, and we definitely need this. However, the big issue here is that there is no mandate in the ECSP regulation for the European Commission or ESMA to provide an overview of this. So we need, and so we try to reach out to BaFin and all other NCAs and ask them, can you please help us to create a mandate for the European Commission to create an overview of liability regimes? And I hope we can get this done in the review.
Just to add a little bit from a regulatory point of view, as Carsten just mentioned, this civil liability, and to be honest, not only the CEO, it was every member of the management which you can discuss whether the head of compliance, the head of legal, who will all be liable. It was really, in the beginning, I just said that we had two reasons why there was only one application for a license. And this was definitely the second one. We had so many discussions with them, and they all said this does not exist in any structure in Germany, that if you are doing business, that if you are part of the management, that you are personally liable for something that somebody else produces, just you have in your mind, because it's a crowdfunding platform, and the project owner, he's preparing the documentation, and it was a liability that started minor negligence, which is the lowest level possible, and this normally does not exist as an institute in Germany, that somebody, and you do not know who, member of the management, is simply negligence will be liable, personally liable. And this was definitely an obstacle in Germany. And as Carsten just mentioned, it's quite funny because it was a Swarm Financing Companion Act, and it was a joke that everybody said it was an anti-Swarm Financing Companion Act, because it was definitely clear that nobody can take this risk, and nobody would infer that, definitely. And as Carsten just said, last Friday, the Future Financing Act verified that, and they changed it. So now the crowdfunding platform will only be liable for willful misconduct and real negligence, which is okay, you know, and only if they do not provide the investor with a KISS, or he's not informed if there is a major change, which means that he's not liable for the content anymore. He's only liable, the crowdfunding platform is only liable for the delivering of the KISS.
Thank you very much. There I see Diego Valiante, please.
Hi, Eugenia. Hi, everyone. Thanks for your remarks and for sharing this interesting information. I just wanted to make a few remarks on what has been said, just because also in 20 minutes I will need to leave. So I think, of course, at this stage it's still too early to assess the impact of the implementation of this SPR. I mean, it's been 10 days. But it's encouraging to see first numbers of platforms that have been, and I think it would be interesting, maybe, Carsten, that if you look at it from a different perspective, because we cannot expect platforms all to be authorized and operate in all the 27 member states, but rather if this SPR encourages platform to market their services in 2+ countries, I think it's a different statistics, and I would like to see maybe what the statistics look like. Also, it's very encouraging to see that there are quite a number of platforms that offer both loans and securities. This is another key aspect that the license wanted to achieve. And I think we'll see more of that, because I think at this stage, initial stage, we're seeing many platforms just converting the actual business to under the new license. But this doesn't mean that we'll not open up opportunities to expand on different services. And also interesting to see that many platforms are also becoming payment service providers, which was actually a very contentious issue during the negotiation. When it comes to the German case, I think, and also to the Danish case, it's obvious that Germany introduced this conditionality in the definition of loans precisely to keep the national regime. Doesn't mean that we will not tackle it, will not be tackled in a review. But having said that, I think what this regime wants to do is to stimulate competition. Now, the Danish can keep their prohibition to market shares of private limited liability companies, but does not mean the Danish investor cannot invest in private limited liability companies located in different EU member states. That prohibition does not extend to shares of private limited liability company anywhere else across Europe. So this means that why would you not see a platform that takes a Danish company and allows it to issue a share in a non-Danish company, and then basically incorporate even that non-Danish company into their Danish legal entity. So the question is, now the competition is opening up, and platform can enter every member states, including Germany. If Germany wants to stay with their old-fashioned regime, they are happy to do so, but they cannot put barriers on those platforms that want to enter the German market. And that's not possible under the regulation. If that is the case, that should be the cases that should come up and be brought to the attention of the regulators. I don't think that the review will harmonize every single aspect, because that was actually the outcome of the negotiation, precisely to keep some of these national specificities wherever is necessary, but at the same time allow competition to come in and platforms that want to operate cross-border to operate cross-border. So I think that is an important aspect to keep in mind, and also to manage expectations. This was, yeah, I mean, I see that it would be also interesting to know, Carsten, how many non-EU companies have been seeking authorization, have been established in the EU, has sought authorization under this SPR. This also would be an interesting statistic. But overall, yeah, that was my, just to share a few comments, and yeah, thank you.
Thank you very, very much, Diego. I see Ella, she wants to talk.
Yeah, well, one comment on the last feedback. Thank you very much, Mr. Valiente. I think, if I recall correctly, in the voting for the regulation, it was only Austria who wanted to vote in favor of national regime. So I think generally the stance was we will not have like national regimes. I think my concern would be, or at least I can already see clients wanting to go cross-border and having specific questions, and obviously I would refer to local counsel, but if one of my clients would want to go, for example, to Denmark, and the actual comment is, okay, I now have this Dutch license which allows me to passport, I think any platform would still refrain or be very hesitant to operate in a country where it's at risk of putting itself or the project owner in a position that it's actually breaching, technically, apparently, local law. So my client would want to be sure that if I have a platform that operates with shares, that the project owner is not in breach of Danish law when going to Denmark on the basis of let's say it's cross-border passport. Because you still are sort of entering a market or marketing in a country where you know there's apparently specific rules that are not, in my view, totally aligned with this European crowdfunding regulation. So how do we see that risk? Again, I would probably defer, or at least refer my client to Danish counsel and say, well, from a Dutch law point of view, I see you need to be able to operate your license because you got it from the Dutch AFM. The AFM passported into, let's say in this case, Denmark. So you should be free to do what you do. Check the license requirements if necessary, what's necessary in the country. But for a part of that, you should be ready to go. And now what we hear today, of course, that may not be true. So yeah, I'm not so sure that I would feel very flexible about just telling my client, okay, you have a Dutch license, so go wherever you want to go.
It was a question, or okay? Because I don't think I agree with this, because I think the point is this is not about feeling comfortable. Anyway, today, if you want to provide financial services across the EU, you're not feeling comfortable of doing so under any regime, whether it is MiFID, whether it is all kinds of financial services. You need to seek basically legal advice where you can provide services in the country. But obviously, the Danish law cannot prohibit a Danish investor to invest in a private limited liability company that is not Danish. Okay, I mean, the Danish law will have a requirement that says you cannot invest in the equivalent of a private limited liability company in Denmark. Absolutely fine. It's absolutely allowed. In fact, the regulation doesn't include all the shares of private limited liability companies. It creates the definition of admitted instruments that need to be notified. And you have a list, platforms have a list of the instruments that are notified. Whatever is not notified cannot be marketed. But again, the definition of transferable security, that's, I think, the other issue, legal definition that we're not going to solve here, because crowdfunding is not big enough to say we are going to harmonize the definition of transferable securities, which is so much larger market and is regulated under MiFID and other legislations that are much more, let's say, that refer to much bigger markets than crowdfunding. So the problem is ultimately there. We don't have a definition of transferable securities. So in some countries, share of private limited liability companies are transferable securities, and therefore you don't need even to notify because they will be already captured under the crowdfunding regulation. For those that are not transferable securities and want to be notified, the member states have to do it. But this is already there. It's clearly clear to everyone. So I'm not sure where is the uncertainty about marketing the instruments, because we already know what instruments can be marketed and which one cannot be not marketed.
Just a small remark that if I'm not wrong, under MiCAR now there's actually the a role assigned to ESMA in clarifying transferable securities under that framework. That is interesting because in theory MiCAR excludes transferable security because it will be subject to MiFID and DLT pilot. But of course, it determines also the scope of MiCAR, since it would every crypto asset other than transferable securities. So, but probably it was considered more important in that framework than in crowdfunding.
No, I think these are two different things, because in that framework, we have issues on drawing the line between what is a security, what is not a security. So tokens can be designed in a way that are not securities. In this case, it's already clear which member states define shares of private limited liability company as transferable securities and which countries do not. So it's not that we are interpreting whether the Danish believe that the shares of private limited companies should be either admitted instruments or transferable securities. They already made clear they are not. So it's obvious that you cannot market those shares and so cannot provide those services under these legal vehicles. But that does not forbid a Danish entrepreneur to set up a company even through the crowdfunding platform. If the crowdfunding platform is sophisticated enough somewhere else, and market these shares in Denmark. So there is no prohibition for that. And if somebody says it's prohibited, okay, it's a legal advice, you take it, but I don't think it's a good legal advice.
Anna, do you want to ask?
No, I think if this is indeed the case, I think we misunderstood the prior comment made from Danish by Thomas, excuse me. Because I understand indeed that also, for example, a Dutch company cannot offer, as a project owner, cannot offer its project in Denmark through a Dutch CSP who has an authorization from the AFM and has passported that authorization in Denmark. But maybe there's a misunderstanding. What I do think, if I hear this correctly, and that's what, well, we can't solve today, but I think is generally for the European Commission and ESMA, especially the European Commission, something to take into account is the alignment between all these European frameworks. The fact that we have the discussion whether something is a security or not, and well, the fact that there is not a clear definition of a security, which is the same in every member state, that causes the problems, not so much in this crowdfunding regulation framework, but also in terms of prospectus regulation and MiFID, etc. So I think there's more to do, although I fully understand it's very difficult. But in terms of alignment of all these frameworks, rather than just focus on one specific one and trying to clarify and to introduce definitions like indeed admitted instrument for crowdfunding purposes, whatever that may be. This is a comment, not a question.
Thomas, please, that you were called upon, so.
Yeah, no, just want to clarify that the Danish prohibition is on private limited companies. If you're incorporated in that way, the prohibition says you can't offer your shares to the public. So if you're incorporated in any other way, then you can. The trouble is that most entrepreneurs, all small enterprises, are private limited liability companies and therefore are effectively excluded from equity crowdfunding in Denmark. You can just incorporate in another form, either in Denmark or elsewhere, but as soon as you are a private limited company, you can't offer your shares to the public in.
I'm afraid we have a connection problem with Thomas. Thomas, we don't hear you. Okay, but I think he clarified that it was
Denmark, side of Denmark.
Okay. Sorry, Thomas, we lost you for a few minutes. No, I think 1 minute or something. But
for the key point.
Yeah, sorry. You were saying that it's a prohibition. Let's say, if I can summarize, on company law. So it's the law of where the seat has been taken. So I mean, does not concern company from other countries, right? But yeah. Maybe you want to add something that we could not hear.
If you're incorporated in Denmark as a private limited liability company, you cannot offer your shares to the public in Denmark. You can offer them abroad. Obviously, Danish law or this restriction doesn't apply to other jurisdictions. You can also incorporate in other ways in Denmark and then offer your shares to the public in Denmark. Or you can incorporate in another form abroad and offer those shares in Denmark. But the effective prohibition appears from the fact that all entrepreneurs and all small and medium-sized enterprises in Denmark are incorporated as private limited liability companies. So effectively, they can't offer their shares to the public. They will either have to incorporate in a different form or offer their shares abroad.
Thomas, just one question. So if a Dutch limited liability company incorporated in the Netherlands want to offer the shares in their company to Danish investors, is that possible or is that not?
Yeah, good question. Well, the provision says if you're a private limited liability company, you can't offer the public your shares in Denmark.
Irrespective of where your seat is.
It doesn't say.
That was my point. That was exactly my point.
Yeah. Okay, then I agree. Yeah, we have the issue of not being able to passport them.
Yeah.
Yeah, so probably, Thomas, you'll be regarded as an expert in these when they want to expand in Denmark, since it's quite without platform your country. No, just joking, but I mean, we discussed that it's from a competition point of view, of course, if we clarify this aspect of the place of incorporation could change a lot in Denmark as in other countries that there's a small market. So it's time. Sorry, yes, Tanya, you wanted to add something before we move to the next session?
just a short comment. Might already work for the next session, just because here we have a statutory ban, but because we talked about competition. But like, for example, in Germany, it's simply a matter of fact, since for the limited liability company, that nearly all startups came with use. It's simply, as a matter of fact, it cannot be sold as with a crowdfunding platform because of the notarization requirements. So it does not make sense to sell shares in a GmbH, and it's not possible, to be honest, because even the offer, there would be notarial requirements. So it's not only a question whether it is allowed, yes or no. There is no ban from doing that, but because of the notarization requirement, it doesn't work for crowdfunding. And maybe this is, as Thomas just said, for Denmark, sure, it would be possible to be an AG or something, but no young company or project owner or something like that would ever structure it as an AG because it's too expensive and it's not easy to handle. You need a lot of advice. It costs a lot of money. So as a matter of fact, it does not work. Real equity crowdfunding still does not exist in Germany. And this is maybe because Anne just said a few hours ago that the loans, the subordinated loan, should be treated as a loan. But having in mind that we still have no possibility to have equity crowdfunding in Germany, having this mezzanine product is really, really important, because otherwise we simply can't do real equity crowdfunding as a matter of fact, and not as a matter of a ban.
Thank you very much. I see a question that maybe we can ask Laurent, if he can. The list of admitted instrument that was I think published in 2021. There will be a new updated version, or we'll still remain with the 2021?
No, so technically we contact NCA on a yearly basis to remind them of the necessity to update the information. So those NCA who change their mind and decide to adjust, and this also apply for language, for instance, or the admission of certain type of private limited company, and all those items which are in the crowdfunding table on a yearly basis. We raise their attention to the need to update the table, and then we collect hopefully also to seeing the concern that some information provided, or the lack of information provided, creates with the industry. So we collect this information and we update the table. Just so you know, so the decision is not so much into ESMA hands, but all I can say is that we are raising the point on a regular basis with NCAs.
Thank you very much, Laurent. So we can move to the next session about interaction with other frameworks. So we already mentioned the scope of the crowdfunding regulation, and maybe it's also interesting to underline that in certain regard there are limitations in how to offer your services, in how to structure the offering. So there's a condition to the use of SPV, because crowdfunding is expected to be a more direct form of investment, and the same in terms of use of collective investment schemes. And so this is the interaction with the Alternative Investment Fund Directive or other legal framework. So I ask, I think I had on the program Umberto Piatelli and Roberto Ferretti on briefly on this topic. I don't know if they are available. We are a bit late compared to the program. So yeah, I see. Yeah, please, Roberto.
I don't know if Mr. Piatelli wants to start first.
No, please go ahead, Roberto. I will follow.
Well, just a couple of words about the interaction between European regulation of crowdfunding and collective investment schemes. Actually, as I said before, Eugenia, the rationale behind the European regulation is to facilitate the direct relationship between investors and project owners. But this does not prevent collective investment schemes from acting as investors, in particular, sophisticated investors. This means that private individuals can avail themselves from the interposition of a collective investment scheme to invest in a project. This is quite clear from the applicable regulatory frameworks. Instead, if we look at the possibility for a collective, an asset management firm to act as a crowdfunding service provider, well, we have to look at the national regulatory regimes. Because, for example, in Italy, asset management firms are prevented from being authorized as crowdfunding service providers. This is clear from the legislative decree having adapted our current national regulatory framework to the European regulation, because the Bank of Italy, who, as I said before, have competence to authorize crowdfunding service providers already licensed as banks, payment institutions, e-money institutions, and national financial intermediaries, basically intermediaries granting loans in whatever form. So these competence of the Bank of Italy is restricted to these kind of institutions and collective investment schemes, and generally asset management firms are prevented from being licensed by the Bank of Italy. This is not required by the European regulation, which generally speaking allows crowdfunding service providers to be licensed to provide different services other than crowdfunding services, but this is the choice of our national legislature. What about the interposition between project owners and investors on the side of project owners? So the question could be whether a crowdfunding platform could offer not only transferable securities and admitted instruments, but also units of collective investment schemes. This is the current situation in Italy, because I had a look at the recent Italian report on crowdfunding issued back in June by the Politecnico di Milano, that is the most important Italian technical university. The Politecnico has an observatory especially devoted to crowd investing and publishing interesting statistics on the activity of Italian crowdfunding platforms. And if you look at this latest report, as I said before, published in July 2023, we see that there are quite a few crowdfunding platforms offering not only transferable securities, but also units of collective investment schemes. It goes without saying that these crowdfunding platforms were in operations under the previous regulatory framework. So, and these under the Council regulation issued back in 2012. And the question here is whether or not these crowdfunding platforms will be allowed to offer units of collective investment schemes under the EU regulation. My impression is that they will be prevented because the units of collective investment schemes fall obviously outside the scope of the definition of transferable securities, and they cannot qualify as admitted instruments for crowdfunding. Therefore, there will be a stop in this activity, and the Italian legislation has not envisaged the possibility to carry on this activity under a different national licensing framework, because starting from the 10th of November 2021, CONSOB declared that its own regulation had been repealed, automatically repealed, due to the entry into force of the European regulation. I would be very interested to know whether or not there is a similar experience in other countries, and therefore if there are crowdfunding platforms currently offering units of collective investment schemes.
Unfortunately, today there's no Sebastian from Luxembourg. I cannot pronounce his last name, so I will not, but it's like Miestra or something. I'm sorry for about it. I really am sorry. I don't speak. I'm not good at this language, but he's one of the experts in this domain, and he wrote his chapter. And for what was my understanding is that in at least in Luxembourg there was ways to use the crowdfunding regulation in order to offer units of collective investment schemes, but it was discussed and not not so streamlined. Yes, Anne, please.
Yeah, maybe a small comment from my side. It's Hooghiemstra, so it's indeed a very difficult name. But we have one of our clients who have set up a structure through an SPV to enable a part of the units in a duly managed by an alternative investment fund manager, licensed and authorized, etc. So units in that AIF, in the fund itself, to be offered to the crowd through a crowdfunding platform that's authorized as well. So there are some ways, but then indeed it needs to be an SPV in accordance with the crowdfunding regulation. So in this particular case, it was able to to make use of the SPV. Because it's in this particular case also a real property asset. So the project itself referred to indeed an illiquid, indivisible asset. But it's very limited and it's difficult.
Yeah.
Yeah, sorry, I lost. So in which regard is the illiquid, the investment that you were referring to?
A real estate.
Okay, yeah. So it's the typical case that was intended under the regulation. I would ask also to Edoardo Reggiani that to share his experience about SPV use.
Yes, talking about like the Italian market, especially on the equity crowdfunding part of the Italian market, SPVs are really common, especially when we talk about like investment in startups or scale-ups, because usually like startups or scale-ups doesn't want to have a large cap table, especially when there are co-investors, like institutional co-investors. So what they were doing with the previous regulation was to set up SPVs in order to raise the money through like the investors in a dedicated company that will invest in the operative company. And that was a pretty common dynamic in the Italian equity crowdfunding market. As a platform, we did like many campaigns through SPVs, also in partnership with the wealth management companies. So what we have to explain to the regulators in the authorization phase was how we were using like SPVs and why like there was the need of an SPVs. For example, if you have like a fundraising round for a startups in which, I don't know, like the minimum investment is 500,000 euros, could not like be it was really difficult for a crowdfunding platform to have like this minimum ticket. So the use of SPVs was intended to like allow the investors to participate to those kind of deals, and was like tens of campaign like that in Italy with the previous regulation. So all the players, I think, but it is what we did was like to explain to the regulators how we intended to use SPVs, and it was okay. I mean, like the regulators understood like the need and allowed us to continue to work how we were doing with the previous regulation.
Thank you. I see Karsten.
Yeah, on the SPV issue, I wanted to say maybe a positive point for Mindaugas and Diego and Laurent. We are actually, lobbying the German government to use the ECSP regulation regarding SPVs to also implement those in the German national crowdfunding exemption, because we find it a really good one. It's pragmatic. It works. It's going to work well. I think the way the regulation makes sense. So this is maybe one of the examples where, like, it's the opposite of regulatory arbitrage. I don't know if there's like an academic term for it, but it's like where the European regime sort of reflects upon the national regime and helps the national regime to improve as well. So I just wanted to mention this as a point where the ECSP is probably going to have a really positive influence as well.
Thank you. Thank you, Carsten. Maybe now, if there's no other intervention about these indirect form, we can move to the other very interesting interaction of the crowdfunding regulation with payment service directive. So there has been a discussion. We have a Q&A that were referred to also by Anne and Ella previously. So maybe I give the floor to Anne for the first explanation, if it's my understanding that she presented the question in the first place.
Thank you. So the issue was in the Netherlands, and I think it's applicable in all the member states, I would assume. But maybe some just a bit of background. From a Dutch law perspective, the crowdfunding platforms were actually facilitating all the payment flows already. So the ones that already were in the market before the crowdfunding regulation was in place, they were used to, well, be the intermediary, so to say, to facilitate those payment streams flows. You can have a whole discussion whether or not that was supposed to be covered under the Payment Services Directive or not. We're not touching upon that discussion now, but this is what was the situation in the Netherlands. So there was a big step to be taken by the crowdfunding, by the CSPs, because it was made very clear under the crowdfunding regulation, as you all know, that as from the license, the crowdfunding regulation being applicable, there's no longer that possibility. So they had to either indeed obtain their own license or work and cooperate with a payment services provider that had the appropriate license. And specifically, that wording caused some issues. The fact that the crowdfunding regulation in the recitals refer to a license or an authorized payment service provider caused some questions for the already MiFID licensed crowdfunding platforms. In the Netherlands, we had this distinction between big distinction in terms of frameworks applicable prior to the crowdfunding regulation between the crowd lending platforms and the crowd investing platforms. The crowd investing platforms had to already obtain before a MiFID license. Some of those MiFID licensed platforms or crowdfunding service providers also had the authority or the license to provide the ancillary service of, well, safekeeping, custody services, so to say. So those CSPs that already had that MiFID license obviously had to obtain a new license under crowdfunding regulation, the CSP license. But there was this question, okay, what can we do? Do we now need to make a distinction between the payment flows that relate to crowdfunding offers that we offer under the 5 million euros as a crowdfunding service provider? Or can we still act as, well, an asset safekeeper, first of all, but also offer those payment services in line with the specific exemption under the Payment Services Directive that is available, shortly put, to custodians who have this license under MiFID, as well as providing the ancillary service. I think this is a very technical. I notice that I feel it's difficult to make it a little bit less legal and legal wording, but there was this really specific question being raised, and that that was raised in an early stage by some of our clients because they had this issue, and obviously they did not want to either be required to have their own PSP license, nor wanted to change their whole business model if it was not really needed, if you understand what I'm saying. So that was one of the things that I think the AFM, the Dutch regulator, was very proactive. They understood the issue. They also, I think they kind of agreed to our arguments that we gave, that this type of MiFID licensed CSPs, so the combination of the two licenses, should be able to rely on the exemption that is available to them on the Payment Services Directive, which is obviously the main framework for payment service, rather than on the basis of the crowdfunding regulation being subjected to an actual license obligation under the Payment Services Directive. So that was raised through, in any case, the AFM to ESMA, to the European Commission. And I know that, well, we all know the ESMA Q&A that were in this particular field answered by the European Commission. So this typical issue came up and was answered thankfully in a way that we hoped. And what I just wanted to mention, what I find really proactive and quite pioneering from the Dutch AFM was they understood that these clients, these CSPs, could not really wait for the answer of the European Commission to be given. So what the AFM did, they granted the license, irrespective of that specific crowdfunding platform or CSP not having arrangement with PSPs or having the clear answer as yet in respect of the availability of the exemption for themselves. But they granted it under the condition that the European Commission would not answer differently. And if the European Commission would answer differently, then this specific crowdfunding platform needed to change their business. So there was a really proactive approach and interesting approach from the AFM, I think. And thankfully, it was not needed, and it was confirmed by the European Commission that these type of CSP, MiFID licensed CSPs could still make use of the exemption that's available under the PSD 2.
Thank you, Anne. Actually, I'm really impressed that you made it very clear and simple, even if, as you said, it's very technical, but with a great practical relevance. So it's good that you could obtain an answer in this regard. I think that Ella also wants to add something in this.
Yes, well, to add on, I think in Anne's situation, it was the crowdfunding platform that had a MiFID license with the extension of the ancillary service asset safekeeping, allowing it therefore to do the PSP activity. In my case, it went even further than that. My client also had a MiFID license. They actually used another entity with a MiFID license that had the asset safekeeping. My client did not have the asset safekeeping. Thus, it could not adhere to the PSP activity because that's connected to the asset safekeeping. But the AFM accepted this construction. And I think what is interesting there for everybody to know that at least in the Netherlands, the AFM seemed to regularly take the view that any PSP relationship with the platform was a form of outsourcing by the platform. Whereas here we actually argued, no, it's not outsourcing. It's a separate service from the, let's say, the PSP, in this case in MiFID allowing PSP activity, but it's not connected to or not literally the activity of the platform itself. And for me, it was very important. You can think it's a technicality, but it also, of course, brings the question of liability. Who is liable for this payment service? What happens if thing goes wrong? Is the crowd looking at the platform, or should it go actually to the actual service provider? So I was very happy with this outcome. And I'm sure that variations may apply throughout Europe, but this is the approach that the AFM accepted.
Thank you very much. There is another issue raised in the chat. So beside, of course, the case where that Anne explained, so when the crowdfunding platform is not a MiFID firm, but as a crowdfunding license, and use another payment service provider for payment services. The question is whether the crowdfunding provider needs to register as an agent of payment service providers, since there is obviously a connection between the payment service provider and crowdfunding. So the answer for Florence provided for France is that yes, the National Competent Authority requests such a role in France. I give the floor, I think, to Umberto if he wants to share the Italian experience.
Thanks, Eugenia. I believe that this is, in a way or another, connected to the last point raised by the colleagues. In Italy, we have been requested by the authority by the regulator to confirm that platform acting with a payment service provider will be appointed as agent. But we have also cases in which the payment service provider, which is EU-based, is now refusing to appoint the platform as agent. They are of the idea, I mean, the legal department is of the idea that this is not required. So we have submitted the point to the regulator, and submitting this point, we have also raised the questions and tried to suggest a possibility, which is the fact that having been granted with such a license, a crowdfunding platform could also be considered as including under their license or capability the role of the agent. If you look at the other kind of license granted, for example, under MiFID, so asset manager or fund manager, or even bigger kind of license, like in Italy, the professional lending license. I mean, all of these authorization will grant also the role of the agent or the credit broker. So we are wondering why, in this case, it should be different, considering that the authorization is for sure more relevant than the registration as agent, which in Italy is governed by another authority indeed. And so that a solution could be to consider, the crowdfunding platform as already including, this capability without the need to be registered as agent, also because they are already known to the regulators in Europe. We didn't get any feedback from the Italian regulator so far. Actually, I mean, the question was raised. We have replied, but we didn't get back any yes or no. When we got the next round of questions, the original question simply disappeared. So I cannot tell you if this is a good news or not. The point is still open, and it will be even more complex if the payment service provider will stay in its position to deny the appointment of agent, because in this case, the crowdfunding platform could be blocked in reality and not able to operate in the lacking of this appointment as an agent, which is, of course, a big issue.
Thank you for the answer.
Thank you very much. And also Anna answered in the chat saying that confirming that in the Netherlands it's not mandatory, right, to have to be an agent, unless of course they are doing more complex activity and as agent of the same. But
yeah, so to comment on that, but normally what we now see, because there's the requirement of the PSP being involved, you see the payment flows being shifted, really being brought out of the crowdfunding platform, and there is a difficulty. There's a difficulty of getting aligned the exact scope of work, so to say, from the CSP compared to the PSP. So you see this discussion between these parties in terms of, okay, I have, as a CSP, I have to register. So there needs to be communications between the two in order to ensure that everything is being aligned properly. But no, in general, it's not being considered an agent. At least that's my understanding. I don't know, Ella has another understanding, but this is what I understand to be the case.
I agree.
Great. Thank you to both. So moving to the next difficult interaction areas, we have what we have already two areas that we have mentioned. The first is the interaction with the crypto asset framework. So both DLT pilot for the area of transferable securities and this sandbox regime, and then for the rest, or MiFID, of course, if it's cannot fall under the sandbox, and then the MiCAR. So what happens if then my understanding is that there are already business models as such that offer through crowdfunding platform forms of crypto asset. So what I think that on this I have both Roberto Ferretti and Konstantinos. Please share your thoughts. I think Roberto had a professional experience in this regard.
Yes, if you want, I can start by telling a few words about my professional experience, because we started discussing with the Consob, our Italian securities regulator, the possibility to license a crowdfunding platform proposing tokenization of not actually transferable securities, but atypical financial instruments, participated atypical financial instruments, being convertible and therefore, in our opinion, qualifying as transferable securities. The rationale behind this project was to facilitate the exchange of transferable security via the blockchain, so by taking advantage from the distributed ledger technologies. And the starting point for this project was the consideration that one of the sensitive, one of the delicate issues when investment crowdfunding is considered is the lack of an efficient secondary market. And therefore, those having developed this project we're thinking that DLTs could help build an efficient and cost-effective secondary market. What is the problem? What was the problem? The problem that we discussed with Consob. There were many issues actually, but what sounds more interesting to me for the purpose of this webinar was the nature of the secondary market, because as you perfectly know, the European regulation only allows for the bulletin board provided by Article 25 of the regulation. So our crowdfunding service providers may not go beyond the limits set by Article 25 of the EU regulation. And starting from these 2 points of view, so trying to facilitate the construction of an effective and cost-effective secondary market on the one hand, and try to keep the project within the limits of Article 25. Those who proposed this project to Consob decided to leverage on the DeFi, the decentralized finance. And in particular, they proposed to have a liquidity pool put in place where the crowd investors deposited a small percentage of their investment. So 1% of the transferable security subscribed by them had been put into the liquidity pool in order to make a pool, liquidity pool, available for other investors to exchange their tokens with the securities issued by the project owners. The assumption was that a liquidity pool is a DeFi structure, so there is no manager. And for that reason, a liquidity pool does not qualify as a trading venue under the MiFID. As you can easily understand, it's not a simple matter. It's not, in particular, this qualification of liquidity pools is not self-evident. But I must say that the approach of Consob was very, very rigid, because they started from the opposite assumption, that is that whenever there is a venue in the wider sense allowing for the exchange of transferable securities, that venue would qualify as a trading venue under the MiFID. Irrespective of the circumstance that the trading venue is decentralized, that there is no manager, there is no exchange, no bilateral exchange, because when I go to a liquidity pool, I put one token and I bring another token. So there is a unilateral transaction at that point in time. But nonetheless, according to Consob, whoever designed the liquidity pool sets the rule governing the functioning, the operation of the liquidity pool, plays the role of manager of a trading venue. This is the approach of Consob. I'm not discussing that approach. That's interesting, but that approach leads me to a couple of questions that I would like to pose to you, because there are various issues apart from the only partial overlapping between the ELT pilot regime and crowdfunding regulation in terms of financial instruments that can be traded in a DOT pilot trading venue, and those being admissible for crowdfunding. But more generally, I think that it would be advisable to assess whether the MiFID regime for trading venues fits small, medium enterprises and feeds crowdfunding. Because actually what we've seen when dealing with this project was that any solution being viable for Consob was too costly, was difficult for the crowdfunding service provider to set up a business being fully compliant with MiFID and at the same time being cost efficient. In addition, and more generally, it would be pretty interesting to further investigate the interplay between crowdfunding regulation and DeFi, even if I am perfectly aware that DeFi is a big issue, a big regulatory issue per se, and probably nobody knows how DeFi will be governed and regulated in the future. I hope that this practical experience can be of interest for all of those who are connected, and can stimulate the further discussion about the interplay between the crowdfunding regulation and the MiFID framework.
Thank you, Roberto. Indeed, I think very complex and interesting. I think that the first reaction was also by the Commission in this way. If you remember, I mean, there was a discussion in trilateral negotiation, the European Parliament wanting to bring in also crypto asset. Then the final decision was, okay, it's already so complicated just sticking to crowdfunding. Then we will discuss later on how to do
Absolutely.
it. So, but now it's the moment. I mean, so you're right, and that the market needs an answer in this regard. I see that also Matteo wants to talk about. I don't know if you, Konstantinos, do you want to add before I give the word to Matteo?
Actually, I would like to address a different issue, that is about the possibility of crowdfunding service providers to provide services relating to security tokens, but since Matteo is also working on secondary markets, perhaps he would like to say something what Roberto described before.
Or maybe I can wait so that we use the questions Roberto raised as a sort of a bridge towards the next topic, maybe. So we keep some order. What do you think, Eugenia?
Yeah. I think you're right. Konstantinos, please go on, because I will then give also to Matteo the floor for connecting these with the bulletin board topic. So it's perfect.
Great. I will just try to be very, very brief. And actually, it's quite funny because when crowdfunding was first created, it was considered financial innovation using technology, and everyone was so enthusiastic. But you can see how fast technology moves, and somehow it has even become obsolete. And now there are new ways of alternative finance, including, of course, security token offerings, which try to disintermediate and therefore try to get rid of the use of crowdfunding platforms per se. So it poses a lot of interesting questions, but one of the issues that I have started researching about during the last period has been about the relationship between security token offerings and crowdfunding service providers, and more specifically whether crowdfunding service providers can facilitate services related to security tokens. And here I think there have been two main issues. The first one has been largely resolved according to my view, and was related to whether, first of all, security tokens could be considered financial instruments and therefore fall within the framework of the ECSPR. And there was quite a lot of debate about that. But I think that after the DLT regime, and more specifically Article 18, the issue is more or less resolved, given that the definition of financial instruments is expanded in order to include instruments issued by means of distributed ledger technology. So according to my view, there's no discussion as to whether security tokens could also, in certain circumstances, qualify as transferable securities. But then another question arises. So if security tokens do, under certain circumstances, qualify as transferable securities under MiFID II, then why should crowdfunding platforms not be able to facilitate services related to such instruments? But here we have purely legal problem associated with recital 15 of this ECSPR, which explicitly excludes initial coin offerings from the scope of the regulation. And therefore, a very interesting question arises, which has also been addressed by Filippo Nunziata and De Arruda in their chapter in the book, which is actually how the term initial coin offerings should be interpreted, and whether this concept should also cover offerings of security tokens. And there are actually two main interpretations here. The first one is that the term the initial coin offerings terms is very broad, so it aims to encompass all kinds of token offerings, including also security token offerings. And if you actually see Article 15, the main reason why it excludes ICOs from its scope is that, according to the Commission, it differs considerably from crowdfunding services regulated under the ECSPR. So we can see here that the regulation focuses mainly on the procedure of tokenization, okay, which does not require the involvement of an intermediary as compared to crowdfunding, rather than, for example, the potential marketing of the issued assets. So even if, for example, a crowdfunding platform could intermediate in order to market certain instruments which are offered via the blockchain, then it should not be able to do so in accordance with an ECSPR license. Therefore, in order to, the offer of security tokens would fall under the prospectus regulation, and of course under MiFID when these instruments are classified as transferable securities and the relevant conditions are met. There's also another issue that is associated with the fact that, of course, MiCAR does not apply here because it does not cover crypto assets which can be considered transferable securities and financial instruments more generally. So only offerings of crypto assets as defined by MiCA regulation would fall under its scope. So according to one view, security offerings of services related to STOs, security token offerings, are not covered by the ECSPR. But there's also another view which says that in the literature, initial coin offerings refer only to offerings of utility and currency tokens and do not encompass security token offerings. So if the regulator wanted to exclude security token offerings from the scope of the CSPR, it would have done so explicitly, given that the literature is so explicit on that. There's also an argument based on the technological neutrality principle, which says that regulations shall be developed in such a way that they are independent of any particular technology. So what is important here is not the technology that is being used, but rather the classification of these certain instruments. So based on this argument, there's also the view that crowdfunding platforms should be allowed to offer services related to STOs, security token offerings. Now, my main concern with this interpretation, even though I find it quite convenient, is that I'm not very sure that, first of all, is in line with the use of the term initial coin offerings by the Commission. And if you see different policy documents around this area, they do not seem to differentiate between initial coin offerings on the other hand and other forms of crypto assets offerings like security token offerings. So I'm not sure whether the idea of explicitly excluding STOs from the scope of the CSPR would stand. Now, another issue that is related to what I mentioned before with regard to the technology that is being used in security token offerings is that the way I see it, at least, the ECSPR assumes that the characteristics of STOs differ from crowdfunding services. And this is because distributed ledger technology seeks to remove intermediaries from crowdfunding transactions. And this is why I think that, according to their view, they should not be included within the framework of the regulation. And of course, there's also an issue of legal uncertainty, given that the legal status of security tokens vis-a-vis the ECSPR largely depends on the interpretation by the relevant national competent authority. So how should this issue be resolved? Well, there are different ways. According to my view, the European Commission, in consultation with ESMA, could clarify whether STOs fall within the scope of the ECSPR. For example, they could do so via ESMA's Q&A on the application of the ECSPR, or even more, they could actually amend in the future Article 15 so as to clarify the concept of initial coin offerings and whether it also covers security token offerings as well. But in any case, and given the complexities and specificities which are associated with this kind of technology, I think that if we were to include security token offerings within the crowdfunding regime, and if CSPs were allowed to provide services related to this kind of instruments, then there might also be a need for some amendments in order to more effectively align crowdfunding services with these particularities related to security token offerings, and more specifically, the underlying technology behind that.
Thank you, Konstantinos. So Matteo, please, if you want to connect with these and then move to the other topic of bulletin board.
Oh, yeah, sure. Well, thank you so much. Actually, Just a very quick follow-up on Costantino's point. Actually, well, sorry, I have really a hoarse voice today. I have a flu. I have to say, I also briefly touch upon this question in my chapter into Eugenia's volume. There, I take a little bit more of a lenient approach, meaning I wouldn't exclude by definition DLT-based securities, if only because if they qualify as such under the national laws, maybe they should automatically be included. But again, that was just a very general point that I was making there, so I'm not 100% sure it makes sense. No, maybe should I switch then, Eugenia, to the next point? So which is the one actually Roberto pointed out. Well, here, well, Anne is the real expert here. We have Anne Ackworth here, so please just let me know if I say something wrong. But essentially, in this case, the relationship between the crowdfunding regime on the one hand and the MiFIR regime has to do with the secondary markets, and the relationship between the primary and the secondary markets when it comes to crowdfunding is always a little bit difficult to grasp. On the one hand, one can expect that the traditional idea applies that if you have a very liquid secondary market, well, that sort of by way of backward induction creates benefits also to the primary market. Of course, if you have more options to liquidate your investments at the secondary market, of course, you are more willing to invest in the first place. But that's not necessarily the case when it comes to crowdfunding. There is this very interesting study most of you might be familiar with by Luke Karinen that was published this year that tries to understand. So they arrive from the US, but they have a very EU-focused sample, so I think it can work for us. They come to the conclusion that this idea works sometimes, but not always. So, for instance, they realize that when a crowdfunding platform opens and they declare that they will have a bulletin board, this has a very positive effect on the primary market, but only for 2 years, more or less. This is the critical period that they assess, and then slowly investors start to realize that maybe bulletin boards do not really give the liquidity that they were expecting, so they stop trusting the idea that they will be able to sell easily on the secondary market. So maybe we might wonder whether this is a bug or a feature in the crowdfunding system, because for sure there are some things that might be fixed in the current regulatory regime. At least in my opinion, there are quite some uncertainties in the way bulletin boards can or cannot work. So, for instance, you can tell that both from the supply and the demand side. If you look at the supply side, well, first, every bulletin board run by a crowdfunding service provider can only be active on assets that have been offered on the primary market on that very same on the very same platform of that crowdfunding service provider. This essentially kind of creates an artificial fragmentation in the market. You cannot have a sort of a not really a wholesale, but a multi-product bulletin board that can gather different offers, and this of course increases the search cost, which is the problem number one on any secondary markets. At the same time, as far as I understand, running a bulletin board is not as such subject to an authorization, meaning that it's not a reserve activity. So the question is, can some other entities on the market that are not crowdfunding services providers then step in and do create their own bulletin board without the limitation that we mentioned, just because they are not crowdfunding service providers? Or other questions concern maybe the ability of the project owner to provide liquidity services on the secondary market in line with what we call the accepted market practices on the more mature market. But again, the big problem here is that the bulletin board, of course, are subject to the limitations that come to the MiFID system. And here I come to Roberto's point, this very broad interpretation of what the trading venue is. I can see the concept is very, very tight on that. I see that comes, in my opinion, from ESMA to some extent, and from the way, especially the recitals are written in the MiFID regulation. There, anything that is like just even a set of rules that define who is admitted and how the trading occurs, that's enough to be a system. And then we have the definition of multilateral as interpreted again both by ESMA but also by the European Court of Justice. And anything that is not bilateral is multilateral, so it's very, very broad even there. Of course, these kind of rules can be explained because of this cats and mouse game where the European regulators want to chase these liquidity pools, not in a sense that Roberto mentioned before, but the old-fashioned liquidity pools where you have these kind of exchanges that try to avoid the framework of the MiFID II and the MiFIR, so they want to avoid that, so they tend to have as broad an interpretation as they can. And then, of course, the bulletin boards are paying the consequences of this because they are extremely tight. I had a look to some of them. I have to say, of course, they are all of them, for what I could tell, very much compliant with the limitations, which means that you can only essentially provide a facility to post interest to buy and sell without any interaction on the platform. Some of them have this additional feature that they will send you an alert if somebody else posts a corresponding trading interest. Well, I'm not even sure, honestly, that this is legal because if you look at what ESMA said, even just identifying potential matches and communicating them to the counterparty, that could be something for a trading venue to do. So again, maybe I would say maybe we can work a little bit in the review to see whether we can fix some of these problems. I'm not 100% sure that illiquid secondary markets are, again, a bug or a feature, because if we want really to have liquid secondary markets, then we might need to have some ongoing disclosure duties, because that is what makes a secondary market liquid. But then, and here I refer back again to this study I mentioned before, entrepreneurs might not like it. That's, I mean, if I have to go for a set of ongoing disclosure duties, even in a light version of the market abuse regulation, then okay, then the added value of having a crowdfunding system in place fades away. I mean, so again, that's the point. Maybe the rules might be improved, but it's not necessarily the case that we are likely to have very liquid secondary markets for crowdfunding assets in the future. No, thank you very much.
Thank you. The very, very interesting. Yes, again, we have to deal with the very extensive, broad interpretation that is made to protect investors, of course, and so to cover the most with MiFID and MiFIR, etc. I don't know if Anne, I know that she had to disconnect at this time, but wants to reply. Otherwise, she can do it maybe in 5 minutes when she switched to another system. But maybe I can give the floor to Edoardo Grossule that had to talk about what is outside crowdfunding regulation, so about consumer loans that are not covered by crowdfunding regulation. So before going back to Anne about bulletin boards, maybe he can share a perspective on the new consumer credit directive just approved. Thank you, Edoardo.
Thank you, Eugenia. Can you hear me well? Yes. Perfect. Just very short comments and on this topic, on the interaction between the regulation CCPR and the consumer protection law, because I have to quit, unfortunately. But the starting point is, of course, the exclusion of the consumer borrower from the scope, and include only the consumer investors, if we look, of course, from the consumer perspective. And on this topic, on this exclusion, we focus also our chapter in the commentary, and to deal with how the old directive, the directive on credit, consumer credit of 2008, deal with this issue. And in the perspective also with the proposal of the Commission for the new Consumer Credit Directive. Now we have finally the final text, the Consumer Credit Directive 2, been approved last 30 October, and so we can face this issue with the new provision. And the news from the proposal, so from the contribution that we gave for the commentary and the new text of the directive are important because and are crucial because we can note a change in the approach of the regulation in the new directive respect to the proposal. In fact, while the proposal face directly the problem of crowdfunding, the problem posed by the crowdfunding and credit consumer, now the new directive, of course, regulate this phenomenon, but not as explicitly as the Commission proposal. In particular, in the proposal, we found two definitions covering the crowdfunding credit services and the regulation of crowdfunding platform. And in this case, covering all the cases of crowdfunding credit, consumer credit, both the B2C context and also the peer-to-peer lending. With the new directive, instead, the peer-to-peer lending that was included in the proposal now is fall outside the text of the new directive. In fact, we can find in the Consumer Credit Directive 2, the directive exactly 2023 and 2225, approved last October, the choice to regulate, of course, where the crowdfunding platform directly provide the credit, and so in this case, the platform must be classified as a creditor under the new regime, and the consumer have the protection for this in this case. And the cover also when the platform operates as a creditor intermediaries, so between creditors acting in the course of their trade and business and the consumers. But fall out the case where the platform facilitates granting the creditor between two persons on one side, the creditor that is not acting in their trade or business or professions, and consumers. And in the proposal, also this case was covered, at least granting the creditworthiness assessment and the obligation of pre-contractual information. Now they fall outside, so without any kind of protection for consumers. This is the final choice of in this regime. Of course not, because at the Article 46 of the new directive, the door is still open for this kind of regulation also in this specific case, because the Commission shall assess the necessity of protecting consumers also in this case in the future by the end of the 20 November of 2025, so where the directive must transposed by the member state. So there is awareness that the crowdfunding phenomenon is increasingly form the finance available to consumer that can change the situation. So again, what is an outcome of this choice? That once again, the regulation of this phenomenon will be covered by probably the national legislation. So if this phenomenon increase, we have a field where in the single market, the different member states can have different regulation on peer-to-peer lending. So of course, also in this case, we will see what happen and if the Commission decide in the future to intervene. The second interaction that is really important is regarding the admission, the registration, the supervision of non-credit institution or non-payment institution, providing these services, because the directive confirms the need to ensure an ambitious process, the registration, the supervision, leaving to the member states to regulate it. Is a directive, and so correctly leave the regulation, the final regulation, to member states. In this case, which interaction between the SHPR and the crowd consumer, of course, we will need to coordinate this new process in order to don't create two different regimes for platforms that probably can work in the same field. This is my reflection on the topic.
Thank you, Eduardo. Sorry about the delay. That so I know that you have to leave. Don't worry. Since it's recorded, we will share with you also the rest of the session. But I think we will wrap up in a few minutes for the sake of everybody that stayed with us for more than 3 hours. So I don't want to exaggerate. But
no,
I think
thank you. I apologize for I go very fast in the presentation.
No, but very clear. I think you made it clear that despite the hopes, we will still have two complete separate market segments. So for business, it's all not completely, but in theory, it's harmonized. Also, we underline a lot of differences also in that regard. But on the side of consumer, we don't have harmonization. First of all, for licensing and rules, prudential rules, etc., but not even in the contractual area. That was one of the objectives of inserting peer-to-peer, at least in the Consumer Credit Directive. So I think it's you made it very clear. It's very, very interesting. I think that now we can go to the final remarks with thank you, Eduardo, again, with the topic of what's next, because we know that there is an interim report under study, let's say, and probably based on what Laurent Tristan shared at the past conference of Eurocrowd conference in Milan on 16th of November, that it's expected in 2025. Also, there are delays connected with the new elections and therefore with the change in the Commission. But the topics that might be object of this report and therefore of a maybe future reform in the crowdfunding area are many. So there is also the bulletin board that Matteo was talking about in terms of impact of these systems, if they are providing or not liquidity, how we can make them better and so protect investors, but at the same time also ensure more liquidity than existing ones. There is also another issue that we raised before about sustainability. So we know that traditional providers are now subject, depending on many differences in terms of services, types of products, etc. But they are subject to new sustainability duty, while the crowdfunding regulation does not contain any reference to these quite recent directives and regulation. I found it interesting that I think it was guidelines, I'm not sure RTS, but there is a reference to sustainability preferences. Even if in the level 1 there's nothing about it, but they inserted a reference to sustainability preferences. So this is very, very interesting. And again, I raised also the issue that that was raised before about the knowledge test, that it's not very clear on what it consists compared to what we have already in MiFID. So this could be another topic of discussion, as well as the possible extension of anti-money laundering duties to crowdfunding service provider, even if they are not payment service providers. So as a direct duty and not just as payment service providers. And other aspect connected to onboarding. So I don't know who wants to share their thoughts in conclusion of this conference?
If I may, Eugenia, just a small curiosity, talking about empirical data concerning the ESG objectives. Because if I look back to the report from the Milan Technical University, I see that notwithstanding the circumstance that SMEs as such are not subject to any ESG source of flaw, there is a spontaneous movement that brings ESG aspects and metrics into the deal. And in particular, if I may, I would like to share with you a graph, an histogram. Let's see, maybe you can see here. This is one of the pages of the report. And obviously this is written in Italian, but I think you can easily understand it. You can see the histograms in yellow colors, and that is the number of campaigns, of crowdfunding campaigns. I'm talking about equity-based crowdfunding. The sample taken into account goes from 2019 to 2022. The total number of campaigns conducted in that period amounts to 710. I'm talking about, of course, about campaign conducted in Italy from 2019 to 2022. Well, out of these 710 campaigns, as many as, let's see, 358 campaigns, so a little bit more than one half, provided data useful for calculating and processing the metrics foreseen in Module 300 and 400 of the Global Reporting Initiative. So the metrics normally used by listed companies to give reliable and comparable information about their ESG impact. That shows that notwithstanding there is no legal obligations, the ESG aspects, as I said before, are spontaneously bringing momentum and becoming one of the factors, one of the important factors for investors to choose what to invest in. Hope this helps and can be interesting for the purposes of our discussion.
Thank you, Roberto. Yes, indeed, there are, I have discussed this problem in another contribution focusing on crowdfunding for environmental and social issue. There are many platforms focusing on this aspect and so probably also taking advantage of information, ESG information, even if they are not mandatory. In fact, I mean, they will become mandatory in few years' time, but only for listed SMEs. So just to recall this, but not for non-listed. So probably what we are more interested in crowdfunding will still remain not mandatory ESG information. But all Europe framework and also the economy are moving towards more sensibility for ESG. So it's, I think, important also for crowdfunding to give a signal somehow. So even if voluntary way. I don't know if there are other willing to participate to this discussion or others in connection with the potential reform or just a report based on Article 45 of the regulation or the expansion of the scope of or the obligations of crowdfunding providers?
I can just give a comment on the potential expansion of the amount of crowdfunding offers if we still have the time. Just very, very brief. So yeah, I mean, as you know, this is currently 5 million, and the main rationale behind it has been that in most member states, this is the upper limit of offers to securities to the public without the obligation to publish a prospectus, which is, again, initially a wrong assumption, given that many member states have increased this limit to 8 million. But now what we have seen within the EU Listing Act package is an effort to increase even more the exemption from prospectus requirements to 12 million euros. So instead of having these bracket between 1 and 8 million that's currently given to member states, it's going to be between 5 and 12 million. So given that and this increase, a question that might arise would be, why would it not be also the case that the amount of crowdfunding which can be offered via crowdfunding platform would also increase, given that investor protection rules could be considered sufficient in order to provide trust towards the relevant development of the market. So this is just an idea, but since the two regimes are very closely related, then perhaps regulators would like to consider increasing the amount that can be offered via crowdfunding offerings.
Thank you, Kostas. Very interested in indeed also the connection between still traditional, let's say, financial regulation and crowdfunding. I did not specify it, but in the chat they raised also the in relation to languages. They said that, for example, I think it was in the Netherlands or no, in Germany maybe, but there was the English was accepted at prospectus, but not in the keys under crowdfunding. So there is also sometimes a distinction under the two regimes, as a language accepted or standards accepted, considered as two separate regimes instead of alike. So it's interesting, I think, in different countries.
Yeah,
yes, Anna, thank you.
Sorry, I'm in the car. But this is indeed in the Netherlands the case.
So there is, okay.
Yeah, Ella made that comment and I think this is exactly what Kostas is referring to is exactly what I mentioned before, that the alignment between the European framework should be point of attention for the European Commission and the European legislators, so to say, because it cannot be that the prospectus regulation gives it can be, of course, but you can question whether it's good to have the difference between the two scopes, so to say, in relation to the same type of at least part of the same type of product, securities.
Yeah, I mean, just an attempt to understand the Dutch regulator. So I mean, obviously, but it could be that, for example, prospectus, traditional markets, etc. Also considering that it is a thick document, very complex with financial information, etc., is conceived to be read by professional investors, advisors, I mean, for professional providers, while the key is conceived to be read by very unsophisticated retail investor that want to invest in crowdfunding in a direct way. But I don't know, maybe it could be the rationale, but I could be wrong in guessing. I don't know if Ella that wants to share a point of view and interpretation, of course, of their own legal regime.
Well, given that the summary can also be in English for the prospectus regulation, that doesn't really cover the point that we have distinction between how we look in the Netherlands at investors. I would think I also noticed this package, which is, I guess, in a quite early stage. maybe they missed the alignment with the crowdfunding regulation. So if the prospectus regulation goes up to 12 million, possibly that threshold then goes up under the crowdfunding regulation. At least I would expect that to be the case. Again, it's guessing. I would hope so, at least, because again, otherwise we're getting really weird mismatches between all kinds of regulations. And to be honest, and I think Anne also has the same situation with her client, where we have this say dual license systems where somebody's operating both under MiFID and the ECCPR. It's not easy, particularly because ESMA actually stated that they should be distinguished from each other, and that's how the AFM interprets it as well. So rather than going for the hardest regime, which I sort of tried to argue, at some point the AFM still says, no, you need to treat it differently, but it's impossible, because it would mean that for a client or an investor, I could be for one investment a client under MiFID and another investment under the ECPR, and I would not understand why I'm doing different types of tests, because I'm just looking at one platform and seeing different kinds of investors. I'm not aware that I may be wearing different hats because the platform is operating for one investment under MiFID and the other under the ECPR. So yeah, it's quite unfortunate in my view that they are so not aligned at some points. Also from a practical point of view.
Thank you very much indeed, Anna and Ella. I think we answered also to all the questions in the chat. So if there are no further remarks, Anne, yes, please.
Yeah, sorry, just one addition. Also, in terms of the reform of the crowdfunding regulation, what I would have expected before, and I raised this comment before, but that MiFID regulated firms will be exempt from the crowdfunding regulation. I'm not making friends by introducing this now with my clients because they obtained this license now because the exemption is not available, but it would have made sense that this exemption would be provided under the crowdfunding regulation. Also for MiFID licensed firms that are not particularly, not intending to provide crowdfunding services, but because of the current scope, for example, of the defined term of investors, but also the mere fact that you only need to provide the offer on an internet-based platform, it could also, the scope of the actual crowdfunding regulation may be a little bit broader than initially intended. And well, we have a regulator that is quite firm on the wording of the regulation. So there are discussions whether just regular, for example, underwriters who do a specific, who assist in a specific private placement, but the private placement is being, well, then I shouldn't call private placement, but a placement which is put on a which is based on an internet-based platform and offered to any type of investors, or not, for example, focusing on retail investors, but also to, in terms of crowdfunding regulation, sophisticated investors. They could be covered under the crowd, or falling under the scope of the crowd regulation without actually intending it. So there are some questions still not being answered because of, well, clarity of the scope.
Yeah, that's very interesting. Also in Italy, before the crowdfunding regulation, the already regulated incumbent, let's say, providers could just communicate to the CONSOB their intention to offer crowdfunding services. Now they need to obtain a new license. Based on my communication with the Bank of Italy, apparently there's no application from such regulated, already regulated provider to the Bank of Italy. So this is, I think, interesting. But it's, I think another interesting is that, for example, under MiCAR, if you are an issuer of e-money tokens, you can offer it with your own bank license instead of obtaining a new special license. So there are differences even within alternative finance frameworks, and I think that it's correct that at least they will have to be addressed once reformed, while reforming crowdfunding regulation. So I think we reached really the end of this conference. Initially, we discussed to close at 6. Then we said, okay, online it's better to remain within 3 hours. So the idea was to close at 5, but now we reached the original idea of closing at 6 in the evening. But I really want to thank all of you for participating. Some had to leave before, but I thank also the ones that had to stop their participation before. But thank you again also to Mindaugas, that I think is still connected to us. So I hope that this will contribute to the discussion about the report and review of the crowdfunding. We also, as I mentioned already to our participants, that we would like to translate in a written contribution these few thoughts. So I will reach you out again about this. We'll discuss how to do it. But for now, really a big thank you to all of you for participating, to the commentary, to the discussions, to everything we did together. It was a great journey with you. So again, thanks from my heart. And I also want to thank Chiara, if you can turn on the camera. She was really participating to the organization, to the content, and also a co-author about donation and reward-based crowdfunding in the commentary. So I'm really grateful for her for everything.
It's a pleasure, really. Thank you.
Okay. Thank you. Thank you again, and I'll see you next time, and I hope very soon. Goodbye,
Thanks, everybody. Thanks, Eugenia, for. Bye bye.
Thank you for organizing. Bye.
Recording
Bye-bye.
stopped.